Good morning, everybody. It is Thursday, March 21st, 8:47 a.m. We are back with another market open. We are alive on this beautiful Thursday, and we are here to analyze what's going on in the markets. Now, if you woke up this morning and the first thing you did was not text your significant other or check your social media, but rather it was open up your portfolio, you would have likely seen a little bit of green. And the reason you probably would have seen a little bit of green, right now I'm looking at a decent amount of green. Robinhood 1881, SoFi up about 759 in the pre-markets, S&P 500 523 in the pre-markets, Palantir up 3%, 25.29. The reason we are up right now in the pre-markets is obviously because of what the Fed did yesterday. We have a lot to analyze in the context of the Fed. We have a lot to analyze in terms of the implications of what that means for liquidity around the world. Bitcoin pumping overnight. Inflows on the ETFs yesterday weren't even that strong, but it seems like retail started buying up a lot more Bitcoin after the Fed basically said the same thing they've been saying for a while. But they did say one thing that people aren't talking about that is kind of changing the tone of how people are thinking about the markets and how investors are thinking about where the markets are going. And then we have to talk about the Reddit IPO. I don't know if that's happening in the morning. I think sometimes these IPOs happen like 12 p.m. If it is happening in the morning, then right at 9:30, we will see Reddit RDDT get picked up at $34 a share. It's at the high end of their range, 6.5 billion. I think the IPO, let me go on record right now, is going to do very well. I am not participating in it, but I do think the IPO will do well, and so we'll see how that plays out. Thank you, everybody, for being here. It's going to be a fun day. Let's get into the market open. I'm Beneficial, Gift Magic, Rick, Femos, Christian, Linked Up, Kim, Top Dasher Bottom, Ty Gordon, Switchblade, Brian Chang, Rebecca, Eeyore was right, Digital Content, Emmanuel, Mario. Thank you all for being here today. Tony, what's up from Philly? I love it. Philly cheesesteak, one of my favorite things in the world. I have to get the bootleg New Jersey version from Wawa, but next time I'm in Philadelphia, definitely getting an actual Philly cheesesteak. Kevin, Oak, Raul, Vinoth, Gerald, Leza, Zokol, David, Dan, Taizuko, Zyla, Film and Photography. Zyla, thank you for being here. Josh, Jin Chen, Kaios, Johnny Be Good. Thank you, everybody. Let's get into the market open today. All right, so today was an interesting day. I actually was just participating in a Twitter Spaces with a pretty big account on Twitter called Mario. You guys might know this guy. Kaio says, can my wife Miriam get a shout out, please? Shout out to Miriam, the best wife ever, because you're letting Chaos, I'm sorry if I'm saying your name wrong, Chaos, listen to me in the morning versus having to spend time with you. So you are the best wife ever. Thank you for being an awesome wife. I was in a Twitter Spaces this morning with a Twitter account called Mario. I don't know what the last name is. Mario Nafwal. And it's actually really interesting because this is the account. You guys might have seen him before. It's kind of like a clickbaity big Twitter account where they do a lot of breaking news and stuff like that. 1.3 million followers. It's a lot of breaking news stuff. It's a decent account. I mean, if you follow it, you're just going to get a lot of updates on what's going on in the world from pretty much every walk of life. Now, this Twitter Spaces had about 4,500 people. And it was weird because my heart actually started beating and I actually got a little nervous in the morning. And it's weird because right now, like, I'm not nervous at all. There could be 15,000 people here. I don't get nervous on the market open. And maybe it's because I don't think of you guys as strangers. Maybe it's because I think of you guys as family, as friends, as a community. So, and given the rigor of jokes I make on this show that sometimes tend to be risky, but I think at 9 times out of 10, that's my batting average, tend to do very well. I am pretty comfortable, with this community. But with these 4,000 strangers, and technically when they're strangers, you should be even more comfortable, right? Because it's like, why do you really care about their opinion? I actually got a little nervous. So I got to talk for about 2-3 minutes about what's going on with the Fed, what's going on with the markets. And what I talked about is this post that I want to read to you guys right here. I tweeted this last night. And I think this is what we've got going on in the markets. And this gets us into a discussion around the Fed. So when we were on the Twitter Spaces, there were some really valuable insights. A couple of the hosts of the Spaces were basically saying, J-Pow, not indicating a smaller amount of rate cuts than he thought in December. So we still have 3 rate cuts. A lot of people, including me, Kevin, he was completely blindsided by what happened. He was betting that the Fed would not be as dovish as they were. And I actually think there's a reason they were dovish, and we'll talk about it in a second. But everyone thought they would go to 2 rate cuts instead of 3. So a lot of the hosts of this Twitter Spaces were just like, this market's ripping for no reason. It doesn't make any sense. Like Jay Powell's obviously having a political agenda. And yes, there are some politics attached to it. We'll talk about that in a second. But this was my response. And I think a lot of people sort of shared the same opinion, which is that, and I thought about this last night. Every stock that's going up right now, your portfolio that's green right now, the only reason your portfolio is green is because if you are invested in a company, they have done one out of these 3 things. Execute against EPS or revenue growth. They fit seamlessly within a narrative like AI or crypto, and they're executing against their metrics. So it's not just they're an AI play or a crypto play. They are actually executing within being an AI play or crypto play. And then you've got, they're doing buybacks or initiating a dividend. If you have a company that is not doing any of those things, then your stocks are red. And what are some examples of this? Unity, bad guidance, missed on revenues, they got punished. Tesla, obviously, like this was the big example. We talked about that in the Twitter Spaces as well. No guidance, single-digit growth, they got punished. Enphase, been punished. Adobe, supposed to be a generative AI play, they lost $37 billion in market cap because they had bad guidance and no clear AI strategy, even though they were buying $25 billion of their shares. So to me, it's pretty obvious. Maybe there's excess liquidity in the system, and we'll talk about everything that happened with the Fed that's kind of making, sense that there is a lot more liquidity. But this is about making money. And if you're going to make money, then you have to bet on equities that are going up, or you're out of the market. And if you're out of the market, you're going to collect 5%. There are a lot of opportunities that will do much more than 5% if you bet on the right stocks. But the key point here is you have to bet on the right stocks, because the broader market is not going up, or the individual names are not going up if they're not executing. Companies that did execute, NVIDIA, triple beat, raised guidance, they're up. They're cheaper than Tesla right now. HIMS, first GAAP profitable quarter, 86% growth, they're up. Palantir, obviously, we talked about that extensively on this channel. They increased top-line revenue growth, profitability, they're up. Meta, beat on EPS revenue, $50 billion buybacks, gave a 50-cent dividend as well. So my point here is that inflation is coming down, but it's sticky, which is why everyone thought the Fed would be hawkish yesterday. The Fed ended up being dovish, but it's going to take time for those 75 basis points of cuts to actually happen. In the meantime, the market is not front-running the rate cuts, which is, and if they were, Tesla, Enphase, and regional banks would be up. All those companies, all those stocks rely on interest rates going down for them to move inversely. But rather, the market's saying, because it's so hard to succeed in this environment, because it's so difficult with interest rates the highest they've been in 40 years, if you put up the numbers, you will be rewarded. That, to me, makes sense. And I would be very curious about what the argument against that is. If you are putting up the numbers, if you are within a narrative, and if you are executing against market expectations, you are being rewarded. And by the way, like, that's how the stock market should operate. If Meta beats their EPS and their revenue targets, they should get money from the broader market, because that means this is an asset that is growing. It's an asset that's compounding your wealth, and there's better places to put your money from a money market fund into a company like Meta that's executing. Same thing with a Palantir, a company like Marathon, Bitcoin digital miner. They are in the Bitcoin sort of crypto narrative. They're up 172% over the past year. Instead of the market taking them up 500%, the market said, you know what? This company's already up almost 200%. Let's actually have them put up numbers before we continue to buy their stock. Marathon, I thought they had some good numbers, but they didn't put up the numbers the market wanted. They fell 25%. So to me, this is not a liquidity crazed market like 2021 where anything is going up just for the sake of going up. I mean, goodness, NEO went from $3 to $60. So yes, meme coins are going a little crazy, but that's just a byproduct of Bitcoin going up. That's kind of like people make money in Bitcoin and they put it into meme coins. That to me is not, oh my goodness, like your Uber driver's talking about Bitcoin, which maybe he is, but I still don't think that means that if your Uber driver invested in Unity because he wants peace in the world and he's like, oh cool, Unity, I'm a peaceful guy, I want unity with the world. That was a good joke. I would have been scared to say that on the Twitter Spaces. I am not scared to say that here today. He would have got wrecked. He would not have had world peace on his portfolio. Damn, that was actually a good one. If he invested in Unity, right? Because Unity put up some shitty numbers and they have a crap ton of dilution. So to me, I think the markets are rewarding companies that do well. If you don't do well, you are not being rewarded. And that's what we're seeing right now in the broader equity markets. Now, having said that, let's discuss the Fed. Also, we got to talk about SoFi. I forgot. SoFi. Oh, goodness. SoFi. Anthony Noto pumped that damn stock yesterday on Kramer. So we got to talk about that as well. Johnny, thank you for becoming a channel member. And Christian Soto, thank you for being a channel member for 7 months. Let the doves fly indeed. Thank you guys for being here today. Okay. So let's first talk about what the Fed did yesterday. If you are unfamiliar with what happened yesterday, the only thing you need to know is two things. One you probably know about, and then one you probably don't know about. The Fed said we are not going to raise interest rates and we're not going to cut interest rates. So we're going to have a pause. And we're going to have a pause that culminates in 3 rate cuts by the end of the year. Now, everyone thought, not everyone, but like, I mean, there was people like me that thought we would slow, but like Jeremy Siegel, right? I thought we would get 3 cuts. Jeremy Siegel said we would get 2 cuts. Me, Kevin thought we would go down to 2 cuts. So there was a lot of bearish sentiment in the market yesterday, which is why the market was down before the results came out, that the Fed would go from 4.6 to 4.8. So right here, this is the dot plot. The Fed's fund rate in December was 4.6. This year, they still projected to be 4.6. The first thing you need to know, if you missed what happened yesterday, is that the Fed said we're going to keep the federal funds rate projection to 4.6, which means we're going to go down 75 basis points by the end of this year. Now, they did increase the median projection for 2026. So they were hawkish for 2026, but let's just take it one day at a time. Let's get through 2024. We'll deal with that when we deal with that. For now, the Fed is, saying that 2024 is going to be okay. All right, that's the first thing. The thing people aren't talking about, or the thing people kind of forgot, and this is the part that is a little confusing. The Fed is slowing down the rate of QT. So quantitative tightening, the Fed loading assets off their balance sheet. What the Fed did say yesterday, Jerome Powell said we are going to start slowing down the rate. We're still going to do it, and you can argue they haven't really been doing it because they've been funding the bank term funding program. So that ended a month ago. So maybe now they're actually starting to do it. They're going to slow that down. That is a form of quantitative easing, even if it's not legit, like literally quantitative tightening, right? Because the rate of growth is slowing down for selling off assets off the balance sheet. Now, the Fed has already gotten rid of about 1.7 trillion since 2022 off the balance sheet. So it's not like they haven't gotten rid of some of those assets, but it is slowing down. If that's the case, and you expect 3 rate cuts, it's risk on, baby. Like it's risk on. And the reason it's risk on is because at that point we have more liquidity into the system, right? We have basically quantitative easing to an extent. And you've got the Fed saying we're going to cut rates. Now, will the Fed actually cut rates by 75 basis points? My answer today is no. I think the economy is too good. I think unemployment is not bad enough. We'll look at the jobless numbers in a second because those just came out 20 minutes ago. It's getting to a point where it's like, well, wait a second. We don't really need to cut rates, especially because inflation is still sticky. PPI was 1.6 versus 1.1. CPI was just at the number we projected, but we wanted it to get to that 2 handle. So if inflation is sticky, barring any real data from either shelter or energy or used cars that really shows a decrease in the broader CPI, Canada inflation is down, UK inflation is down, United States is down year over year, but it's not really down yet. Until we get it to really get down, I don't think the Fed is cutting rates. However, what I think the mistake everyone made yesterday, including Jeremy Siegel from Warren, the professor at Warren, everyone thought that Jay Powell was going to pivot to being a hawk because the CPI and PPI data was bad. It wasn't horrible, but it was bad. So everyone thought he was going to be so aggressive on inflation that he's going to pivot. My thoughts were, if he didn't sound like he was pivoting at Congress in front of the Senate or the House of Representatives, then why would he pivot randomly at the FOMC meeting? Now, the other argument that people are saying is, well, it's an election year and him and Yellen, and Biden's probably telling him to take it easy. I don't have any evidence of that. I'm not saying that's happening. I'm not saying that's not happening. That's just something that people will speculate on, and people are free to speculate on that. But in general, if Jay Powell 2 weeks ago in front of Congress said the exact same thing, like literally word for word, what he said at the FOMC meeting yesterday, it makes no sense that people thought that he was going to do some random pivot in a world in which inflation is not like it's like 5 or 6%. It's coming down. It's not coming down aggressively, but it is coming down. And if that's the case, it's risk on. Stocks are going up. The market's exciting. And that's why we are seeing more momentum in the broader equity market. Such and says, admit for Fed chair. I would not want to be the Fed chair. That would be a very hard thing to do. But I got to give credit where credit is due. Jay Powell's been doing a pretty fantastic job, and he deserves to be doing a fantastic job because he missed inflation. And so if you missed it in 2021, you got to recover for it. And I think he's been doing a good job recovering for it, especially after we printed $7 trillion. It wasn't Jay Powell's fault. We printed 40% of the U.S. money supply in 18 months. But now he has to deal with the scenario. So I don't blame the guy for missing inflation. I mean, yeah, it sucked. But I think if I was the Fed chair, I would have missed inflation too. But the point is, how are you recovering? And it seems like Jay Powell is recovering. Let's go through some of these equities, and then we'll talk about SoFi. Robinhood, 1886. up 1.62%. Can we break $19 today? Can we break $20 today? I think there is a chance. We'll see what happens and how much risk appetite is there as the market opens. I don't think this is a market that's going to sell off. I think there's going to be a little bit of a dump. People are going to take some profits, but in general, I think people have realized the cat is out of the bag. The Fed is going to cut rates. Inflation eventually will be coming down. There is no reason to be scared. Liquidity's in the system. We'll worry about 2025 when we get there. For now, let's I mean, what Jay Powell said is basically you can buy stocks. 523 on the S&P. That's up 0.51%. I can't even say I'm saying 523. Even 520 was insane yesterday. But we got 523. QQQ 448. That's basically at 52-week highs. Enphase is up about 1% in the pre-markets. TFC Regional Bank, that's up 0.76%. KRE, the ETF is up 0.86%. CleanSpark down about 2%, but it was up 22% yesterday. So makes sense. You know, it's okay if it's taking a little bit of a break. PayPal 65.52. PayPal's up basically 12% in the past 2 weeks. Incredible stuff from PayPal back into that $65 range. Palantir 25.32 up 3%. We'll talk about them more in a second. Bitcoin fell from 75 to 60,400. It's up from 60,400 to 67,300 in literally 3 days. It is the most volatile asset in the world, and the dip was bought, and that's why you got Bitcoin doing well this morning as well. All right, let's talk about SoFi. So Anthony Noto went on Jim Cramer's show yesterday. Everyone was very confused about this convertible debt offering. Here's what he had to say, and here's why the stock is up 3% right now in the pre-markets.
What I said, which is that people just feel that after the great run, and it was a great run, after the really terrific outlook you gave, after the stock was moving up, that you yourself hurt the stock, and it went down big, and people feel badly that they bought it at 9, only to find out that, well, something was wrong at SoFi.
Yeah, I think it's important to understand why we did the convertible deals, why we did the buyback, and the benefits to shareholders that I don't think are truly understood by the market.
Well, this is your chance.
The first point is we did this deal from a position of strength. We just had a record 2023, over $2.1 billion of revenue, up over 30%, 40% growth in our members, our first quarter of GAAP profitability, over $400 million of EBITDA generation, and gave an outlook that was going to be for full year positive GAAP profitability in 2024, as well as continued strong growth in our tech platform, as well as our financial services business. And we're going to be more cautious on the personal loan business. What we saw was an opportunity from that position of strength was to lower our cost of debt. We had two pieces of debt that were quite expensive. One we did in 2019. It is a Series 1 preferred that pays 12.5% interest.
That's so good.
5 years after we issue it, we can buy it back in May. If we don't buy it back in May, we'll have to not just pay 12.5% interest, but it actually goes up to 15% interest for the next 5 years, and we can't buy it.
Okay, so in other words, it wasn't like you could play around. If you tried to think that maybe we'll go to 12 and we got to May, you would have, and it didn't go to 12, you could have been hurt. It was not like the risk was, hey, listen, it could go up to 20 here. It was the opposite, which is that you had to get this piece done.
Well, I would put it this way. We saw it as an opportunity to do it and have a negligible impact on GAAP earnings per share, and also combined with a buyback, have it be accretive.
But did you think the stock was going to get crushed like this?
Let me finish. Have it be accretive to tangible book value per share by 8 to 10%.
Okay.
When you do a convertible, there is pressure on the stock from investors shorting the stock against the convertible. It's a delta hedge. That does happen. So there is typically 5 to 10% decline. But the reason why we did it is really important, because I think this is what will put some momentum back into the stock. First is we had this 12.5% debt. We also had another piece of debt that's about $500 million that we pay 7% on. So we're going to save between $40 and $60 million of interest expense a year by refinancing from 12.5% down to 1.25%, where the convert is, and from 7% down to 1.25%.
Don't miss a second of Mad Money.
Okay, so pretty simple stuff, right? Noto gets on national TV and he's like, look, the reason he took up Cramer for this offer, right? He usually just doesn't do random interviews during the end of a quarter, is because he sees the stock gets hammered. Like SoFi was at almost $10 at one point. It was pushing 980, 990. Then it falls to below 7. And it's just like the market has a gross over exaggeration or overreaction or misguided reaction to what they did. And as he said in that interview, they're refinancing their debt. It's not diluting shareholders to some oblivion. The debt's going to be payable in 2029. They have a certain strike price, so they have an incentive to make sure the stock is above the strike price when that debt ultimately converts on the convertible note. And by 2029, 2030, when the debt actually has to convert, SoFi should be more than $7, $6, $8 a share. And if it hasn't, then something has gone wrong with the company. And this is going to increase their GAAP profitability because it's going to save them on their interest expenses, which means their earnings per share should actually go up. All of this stuff is very basic, right? All of this stuff is incredibly, incredibly basic. The markets understand this stuff. So someone in the chat says, well, wait a second. Amit, you just said if companies are putting up the numbers, they're executing, and they're doing what they need to do, there is liquidity in the markets to buy up their stock. SoFi is meeting all of the expectations. They're outperforming the expectations. Why isn't their stock going up? Well, it's because of an email that I just got at 9:04 a.m. It's 9:07 a.m. So 3 minutes ago, I get an email, and this is what the email says. Analyst Giuliano Bologna, literally, I think that's how you say his last name. I'm sorry if I'm saying it wrong, has a $4 price target on SoFi. This is the reason this stock cannot go up, even though they're executing. Because these analysts, for some reason, and I don't know what is the reason. I don't know if it's political. I don't know if they just don't like a bank. I don't know what's going on. They will see Noto clearly say, hey, we are refinancing our debt. Just like if you have a crappy mortgage, you refinance your mortgage. Crappy car loan, they did this debt in 2019. Interest rates have changed. They are refinancing. And this is actually going to be very beneficial for shareholders. It's not sacrificing growth, yada, 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 yada. And then Giuliano Bologna says actually $4. Just like this. So the reason I think SoFi is not fitting my thesis, which my thesis has been that if you are executing against a particular metric, the market is rewarding you, is because you've got these people that are out there in the market saying that, you know, these price targets they're just giving these price targets that are a bit absurd. Think of Robinhood. Robinhood got upgraded to $18, $30, and $20 over the past week. Why? Because they executed against their metrics. SoFi is not executing against their metrics. They are. I know they're a bank. It's a little bit more risk with the credit delinquencies, all that stuff, but still, they are executing. Noto is a rock star CEO, but the analysts aren't that friendly. And maybe in the fintech space, SoFi, PayPal, Robinhood, Affirm, these companies are driven more through analyst expectations versus actual fundamentals. In the AI space, it's a little bit more about AI fundamentals versus the analysts, right? That's why we've seen Palantir be able to do well, even regardless of the upgrades Palantir has gotten. Palantir has performed because they got all those upgrades after earnings. So maybe in the fintech space, you got to warm up to the analysts. You got to kiss their boots. And maybe SoFi is not doing the best job. I don't think SoFi has to do that. I don't think they should have to do that. But it seems like that's what's holding the stock down. Right now, it's up 3%. It was up 6% yesterday. So it's up 9% from the lows at 680. At 680, I was buying a lot. I know Sachin here in the chat has a very heavy position in SoFi. He was buying a lot as well. Crossroads, also heavy position in SoFi. He was buying at 680. I think a lot of people in the SoFi community were buying at 680 because it was like, this is stupid. The question today is, can SoFi retain these gains? And we will see as the market opens. Noto pumped it after hours and he did what he needed to do. I don't think you could really ask him to do that much more. Now it is time to see if the rest of the market finally agrees. I think the SoFi short float probably went up over the past couple of weeks. I mean, it went down slightly from 17.8 to 17, but still almost 20% short. We got to see now, are the shorts scared or are the shorts doubling down? Because if they're doubling down, the stock's still going to be stuck for a while. So that's the update on SoFi. SoFi's still doing an incredible job with execution, and Noto said what he had to say. Now it's up to the markets to be able to decide what they are going to do. Let's hear from Tom Lee. Tom Lee was on CNBC yesterday, and he had some words to say about small caps based on what the Fed say. He had a pretty unique prediction about where he sees the IWM Russell 2000 ending up over the next 6 months. Here we go.
You know, again, we talked about the Russell 2000. Big day today. Small caps appear to be all in. Are you all in on small caps?
We are. I mean, our view is that small caps are, on a relative value basis, back to where they were in 99, which was a launch point in 99 for a 12-year outperformance period. I think that means with the Fed doing a dovish pause and CEOs getting more confident, and that means M&A and IPOs and people looking at other sectors, I do think the Russell can rise 50% this year. So the Russell 2000 basically getting to the Russell, to 3,000 as a
He said 50%
price level.
Wait, what?
Yeah, the Russell 2000 is roughly.
I want to be clear. 50%?
Yes.
Not 15. I couldn't tell. It was a 15, 50. I just want to make sure the audience know 50% this year, Tom?
That's right. And the reason is that the companies that earn money in the Russell are trading at around 11 times earnings. I mean, so there's a huge PE story along with a price to book story. There's a lot of Russell 2000 stocks that are actually trading near cash as well. So, I mean, there is a lot of reasons why larger companies might acquire some of these smaller names. And of course, there's there's a big biotech weight in the Russell 2000, which again is gaining momentum. And of course, when the Fed starts to cut, the regional banks benefit, and there's a huge financial weight in the Russell. So I think the Russell 2000 represents sort of the best of things that happen when the Fed starts cutting.
Now, why did Tom Lee give this prediction? I actually have a theory on this. Tom Lee, in early 2023, when the S&P was at 3,600, said S&P to 48. Okay, S&P to 4,800 when the S&P was at 3,600. No one believed him. I mean, even the most bullish of the bulls were like, dude, we're not getting to 4,800. I mean, you got to remember, Palantir was $7. Tesla was $100. I mean, like, things were bad, dude. Meta was at 120, 110 at that time. No one believed the S&P was going to rally from 36 to 48. The S&P ended the year, I think at like 49-ish, 48.50 or something. And now we're obviously at 522. I think Tom Lee saying Russell to 3,000, it's pretty outlandish as a statement. But I think he's doing it the same way he said S&P to 4,800, which is that, hey, to him, after the Fed not pivoted yesterday, but basically shut down any thoughts that they were going to not cut rates as much as they thought they were going to do. I still don't think they're going to cut 75 basis points, but they definitely told the market that they're going to do it. And so the market has to believe them. Tom Lee's argument is like, well, wait a second. NVIDIA is not going to go to 1,300, right? Maybe it does. And if it does, God bless the shareholders, but I don't think that's going to happen. Meta is probably not going to 1,000. It's not going to get $1 trillion of valuation. So all of that money that doesn't want to collect 5% on the sidelines in an economy that's booming, in a cycle that's happening, in a market that has liquidity, that money is not going to go into the big seven. It's going to go into small caps. And if it's going to go into small caps, well, if you got, $6 trillion on the sidelines and a lot of people looking for momentum, and then finally, when we get that first rate cut, I do think we'll get at least one rate cut this year. When that happens, maybe in July or September, I mean, is it kind of crazy to think IWM could go up 50%? It is crazy, but I also see Tom's argument here. And what the argument he made about specific companies, my bearish case for IWM has been, well, wait a second, a lot of these companies don't make any money. Right. And so they're not profitable, yada, yada. His argument, the counter to that point, is that there are a decent amount of companies like SMCI that do make money. They are profitable. SMCI, one of the largest components of the Russell. A lot of people forget that. And when rates get cut, the market's going to front run the companies that aren't profitable that will eventually become profitable because rates have been cut. So it's not crazy. It's not crazy that IWM could get to 300 or 3,000. If that happens, then it's incredible. My bet is not really on small caps. I know there's some leverage small caps ETFs like TNA. Yeah, this is a 3x small cap ETF. So if you buy IWM and you make 5%, this will make you 15%. You've got to be careful with these leverage ETFs because they go leverage down on the downside as well if IWM takes a nosedive. So people seem to be bullish small caps, or at least Tom Lee's bullish small caps. And now we'll just have to see when those rate cuts eventually happen for small caps to gain momentum. The market rally has to broaden. I think that's his point. And if that does happen, we will probably see something like small caps go up. Robinhood right now, 1877. After in the pre-markets, Palantir 2521, QQQ 447. Do we see a little bit of sell-off in 15 minutes? I think we'll see a little, but I think by the end of the day, the market will realize that the cat's out of the bag and that equities are equities and that it's better to buy equities than anything else. And now that we know the Fed is not going to be raising, that there was an argument before the FOMC meeting yesterday that, the Fed might end up raising. Unless we get a horrendous CPI, PPI over the next 3 months, which I think they might not be the best, but they're not going to be horrendous. We're not going to get interest rates raised. And also the Fed, Jay Powell did say this, we're at the peak of the cycle. So for what it's worth, Jay Powell did say, well, we are likely at the peak. If we're at the peak, you got to believe him. And that means the market has to adjust how they value these things. So we'll see how it plays out. But so far, it seems pretty good for the broader equity markets based on what the Fed said. Let's get an update on Reddit. They are going to go live. I don't know if they go live at 9:30 a.m. We'll see in 15 minutes. Sometimes the IPOs go live in the middle of the day. But here's an update on Reddit from Dan Ives. And let me know in the chat if you have a allocation towards this IPO.
Reddit and the IPO market, maybe more, because we can just ask him whatever we want. It's Wedbush Securities Managing Director Dan Ives. Dan, what is? We've all used Reddit, but from an investment perspective, what is it?
Look, I think it's really about engagement. I mean, if you look at their daily active, users, 70 million plus. The question is, it's advertising. I mean, this is a company that's going to do $1 billion revenues, into the next year. So as well as they talked about, can they start to take that advertising, and then when you think about all the data, can that ultimately be an AI story from an LLM? And I think that's, if you look at this from an investor perspective, what's the appetite for Reddit? this is a potential watershed moment, broader for tech,
Yeah.
to just show the appetite that we're seeing at Stereo Labs and others.
So let's talk about the AI, because it's interesting. And of course, I was at an energy conference this week, and everybody was talking about AI. AI learns in part by scraping everything, all this stuff. Reddit, I'm guessing over 19 years of billions and billions of posts, has a lot of stuff. But I do wonder if it's accurate stuff,
Sure.
right? Because there's some crazy stuff on Reddit.
No doubt. But I think, to your point, maybe 5 years ago, even a few years ago, the data, the value of that was not what it is today. So what this has really done, I mean, AI has really put even more like a Reddit or some other names on the map because of the data and because of how you could actually monetize that. And I think that's what we're seeing in this market. This AI revolution, it's not just on the enterprise, it's not just about Godfather of AI, Jensen, NVIDIA. You're starting to see it spread. And I think that's why this is such an important week, showing the appetite is there in the markets.
The CEO, Steve Huffman, who was a UVA Cavalier, but I won't hold that against him, made, I think, $193 million last year. Does that, I mean, good for him, I guess. Does that bother you from just any kind of an investment perspective or corporate governance perspective?
Look, now it's going to be an execution story. I think for a lot of these, when you talk about some of those comps, now it's, can these companies execute and can investors get paid? Because when you talk about the IPO and you talk about everything that's happening here and some of the worries about froth in the market, can you execute and ultimately make investors money as a public company? And that's what it comes down to.
Can they? That will answer your own question. What do you think?
Look, and I think the jury's still out for any of these companies as they turn public. Can they be successful and can they monetize? I think you cannot argue with the success that Reddit's had. Now it's just not just talk to talk, walk to walk, execute on the numbers.
Yeah.
I think Reddit's IPO will go well. I am not buying it. I do think there is a memification towards Reddit. I think people will end up buying it. It's 6 times oversubscribed. Look, valuation is not crazy. It's trading at 6.8 times revenue. They're going to be profitable, I would imagine, in like a couple of quarters, dude. They're $90 million from profitability. CEO compensation package, kind of insane, but it is what it is. And $6.5 billion market cap. The problem I have with Reddit is I think that their moat when it comes to advertising is non-existent, quite frankly. So I think their only real moat, like they're not an advertising company to me. They're a data company, as Dan Ives said, which means if they're a data company, can they strike up similar deals to the tune of the $60 million deal they did with Google to give them the data so that Google can train the LLMs? Or can Reddit create like their own LLM? And then instead of having to look at user-generated content, you ask the Reddit LLM questions, because a Reddit LLM trained off, 15, 20 years of Reddit data, theoretically, if Reddit's the front page of the internet and everyone uses it for information, maybe that LLM would be more productive than everything else. So I think there's opportunities for Reddit to monetize, but I do think, and the reason I'm not participating is because I am not going to be exit liquidity for the VCs. Personally, I don't think that is a way that I want to invest my capital. It's not that I have a problem, buying a stock after it goes public if it was a startup one day, but like these VCs have been sitting on these Reddit shares for a long time. And I don't know if Reddit has proven itself with 73 million users, which baffled my mind. I thought they should have at least 500-600 million people. They have not executed at the level I wanted to see them execute for me to actually be exit liquidity for the VCs. Sometimes you got to be exit liquidity for the VCs because the company's that good, like ARM. I thought the IPO was a bit overpriced, but ARM has performed very well. If you were exit liquidity for SoftBank, you did really well still as a public shareholder. For Reddit, I don't know, dude. I don't know. Mark says a VC himself. Dude, I am never fucking selling my Figure shares. I want to see my Figure shares on my Robinhood one day at like $1, and I want to see the stock at like $900 or something, dude. Like I want to pass it down to my kids. That's like the first deal I ever made in the private markets. I want to see that never be sold. Like I just want to. It's like Palantir for me. I want to see those like last forever. So, but one day I will need exit liquidity, right? And I'm gonna need someone to buy those shares. It's just, I think the company, if they're executing, it's worth being liquidity. If it's not, then it's not worth it. And so, eventually, we got to see how it ends up playing out. What will also be very interesting, the ticker is RDDT, is if Wall Street Bets shorts the crap out of Reddit, right? And if that causes a squeeze, if that actually harms the stock, if it goes against the Wall Street Bet community that publicly said yesterday, we don't want Reddit shares. I don't know if you guys saw that article. They were like, we don't want the shares. Like we don't think Reddit's actually doing anything for us. It's a really rage against the machine type of dichotomy that's happening within Reddit. And it's a very interesting dynamic. And the CEO making $200 million. Yeah, some of the moderators that have been there for 10 years, they don't really like that. And so they're not going to be that beneficial for they're not going to have that. They're not going to give Reddit a lot of benefit of the doubt to see that happening. So we'll see how it plays out in the context of Reddit. And I think that will go live at hopefully 9:30. We'll see how that happens. Bot 101 says, who said you would ever have kids, Amit? I want to have kids one day, and I want 3 of them. I'm very, I have a very kind of fixed mindset on this. I want 3 kids. I want 2 girls, 1 boy. I think, and I've said this before in the live stream, I think 2 girls and 1 boy would be like, because you need a lot of, like, I grew up with a sister, older sister. I think it made me more empathetic, more considerate as a human being. And the funny part I learned on my own. I mean, no one could teach me that. That is, quite frankly, you have to be born with it, and you have to have a unique skill set that is like internal to you to become funny. So no one taught me that. But in the context of being empathetic, I think, feminine energy really helps with that. And so I want 2 girls and 1 boy, and I think that'll be a cool life. But we'll see if that happens. And then I'm going to give them all my figure and my Palantir shares. Okay, here's Josh Brown and Liz Young on what the hell is going on with the markets.
A bit lower, but mostly on the short end as we sort of get a little more confidence that the Fed anticipates 3 quarter-point rate cuts perhaps by the end of this year. The 10-year moving less, so you see a little bit of re-steepening of the curve. Maybe that suggests that the more tolerance. SoFi head of investment strategy. Just to break this down a little bit, Josh, markets seem to take the absence of any hawkish surprise as a positive. It's like we were in a strong market before. The chair is unconcerned seemingly about the little bit of an uptick in inflation, and so therefore kind of game on.
Yeah, my big takeaway that is really that they're going to slow the pace of balance sheet runoff, which I found, I guess, to be something unique. I also think that
everyone was surprised that they're going to slow down the rate of QT, and that's also why the markets, got really excited.
They're talking about it, but they haven't decided anything yet. But it's definitely an indication.
I mean, slowing the pace of balance sheet runoff reminds me of when Henry Blodgett was posting all this stuff from Hussman. So somebody said, well, you're going to sell your stocks then if you're so bearish? He said, I'm going to stop reinvesting my dividends. Okay. All right. We got it. All right. So that's one thing. Here was the other one. This is a quote. The risk is two-sided. If we ease too much, we could see higher inflation. If we ease too little, we could risk damaging the economy. Okay, thanks. For those people who have not been paying attention to what the balancing act is, there it is. And quite frankly, nothing really seems to have changed to the point on either side of that balancing act to push the Fed. And really, I think we're enduring higher 10-year rates fairly well in the broader market, which is certainly not the purview of the Fed. What the 10-year does, they're paying attention. Yeah. Consider this, Mike. You've got 7 basis points in the last week. You got 41 basis points year to date. It's a fairly substantial move in the 10-year. Stocks are weathering that really well. Yeah. So today didn't really give you anything new on that front. And I think the balancing act has to continue.
That is true. Although, again, first of all, we always, Liz, should throw out the little bit of a disclaimer that a lot of times post-Fed moves are kind of like whipsaw one way, then the other way. Right now, it doesn't seem like there's a lot of room for interpretation here. But, if you look at the summary of economic projections, which came out along with it, they keep the median of 3 anticipated quarter-point cuts by the end of this year. Some of the highs and lows changed in there. So there's a fewer deep doves and not as much, in the middle. But I guess I would say is it also comes with a higher than anticipated GDP for the year and a slightly higher core PCE inflation. Now, Powell seemed to say, well, that's just kind of marking to market what we know for the first 2 months here. It's not projecting ahead. But I guess that's understandable. The market would take that as a net positive.
I think it is understandable that the market takes it as a positive, and we should, frankly. If you're looking at just the math of it, which had concerned me earlier in the year, the math of them projecting 1.4% GDP growth, and we were still supposed to somehow generate double-digit earnings growth, it just didn't make sense. So I think their projection to bring GDP growth up is a positive. Obviously, inflation a little higher, not as much of a positive, but not quite as concerning if everybody still thinks the labor market is going to be strong. People can spend and absorb that inflation if they're employed and they're confident in their wages staying steady. The thing that I think is interesting, they did lower the expected number of cuts in 2025. Now we're just kind of pushing out the worry into the future even further. So we came into the year thinking we were going to get 6 cuts. The market has completely weathered that storm, brought it down to 3, and been quite resilient throughout, but lowered what we think might happen in 25.
Rate sensitive stocks, though, are moving. Yeah. And I found this really interesting. The ARK names, well, the ARK ETF itself is up 3%. Metals and mining up 2%. The regional banks are up 2%. Yeah. Like these jumped out at me.
So, I mean, Josh is correct there that we had some very rate sensitive stocks that are starting to go up today. I mean, we'll see if those last. Tesla 177. We'll talk about Elon after the bell. Elon and Neuralink, one of his other companies. Dude, Neuralink is Elon said he's going to be able to cure blind people yesterday. They put it into somebody and like that person's now moving. So we'll talk about that after the bell. But Tesla going up on this news yesterday is interesting because we know their Q1 numbers are probably still going to suck. Same thing with regional banks. Like we know their loans on their balance sheets are still going to suck, right? So it's like rate sensitive companies are going to suck. It's just the nature of what's happening in the markets. So I wouldn't be surprised if the market kind of realizes, wait a second, why are we buying Tesla if we know like rates are still bad? Why are we buying New York Community Bank if we know rates are still bad? Maybe we need to chill, and some of that money gets diverted into something like small caps or some of the other players that are benefiting off of just good execution. Or the market's front running the crap out of these stocks, and they're saying, you know what, the Fed said 3 rate cuts, so Tesla's 175 is an absolute steal in an interest rate environment where it doesn't cost $1,100 to finance a Tesla anymore. Maybe it costs $900 to finance a Tesla. So more people are going to finance a Tesla. We'll see how it plays out. But today will be one of those days where the market makes the decision on how they actually feel about the Fed, because, after hours it was green, but now the market's really got to make a broader decision. So let's see how it happens. For those of you saying thank you for those of you congratulating for 30,000 subscribers, thank you for that. Super, super awesome. Philip says Amit has 30,000 children. I want 3, but I got 30,000. I appreciate everyone being here. I really don't celebrate the milestones at all. If you've seen my Twitter, I never tweet about when there's more subscribers or more followers or anything, because really, and maybe it's cheesy, but I really just don't want to look up. By the way, Don't Look Up by Netflix was a horrible movie, like god-awful movie. I don't know how much money they spent for all those celebrities, but it was horrible. But I don't like looking up. I like keeping my head down and just working. This business, you can get cut off immediately. It's a cutthroat industry. If you don't perform, if you take too many days off, media is intense, right? Media is very intense. So I think 30,000 is awesome and it's a hell of an achievement. But in the grand scheme of things, you really got to execute to have some long-term sustainability here. So thank you to everyone for the kind words, but we got to keep working, dude. We got to keep working, because if not, this thing goes away very quickly. It goes away very quickly. And I think that's the thing a lot of new creators forget about. They get a little bit of attention. They're like, oh my God, like this. It's like, no, dude, you can't be celebrating on these little milestones, because people will forget about you like that, dude, like that. I mean, if I don't keep being funny every morning, you guys aren't going to remember me. And so I have an obligation, a duty to the nature of comedy to fulfill that duty. And so that's a lot of pressure, and it can't stop at 30,000. So there we go. We'll keep moving. All right, folks, 10 seconds left. Thursday, March 21st, 4 years ago. This market was different, but it is 4 years later. It is 9:30 a.m. Thank you, everybody, for being with me here today. The stock market is now open. Wake your ass up. Here we go. IWM up 0.7% on the day. 206. Tesla 176.21 up 0.29%. Microsoft 429. Microsoft is hitting an all-time high today. Seems like money is going into one of the biggest AI players, which is Microsoft. SoFi 740, selling off a little bit from the pre-markets. It was at about 750. Right now, 740 up 0.48%. Uber 79.55. PayPal 65.21. Reddit is not going public at 9:30 a.m., so that's probably going to happen a little bit later in the day. And we'll see what happens on the market close with Reddit. But Reddit right now, not public yet. Uber 79.58. PayPal 65.23. Palantir 25.23. Robinhood 18.70. It's up 0.75% of the day. This stock was 16.85 2 days ago. And so obviously a nice rebound it's had. I think 1685 was, the market was just overreacting to random worries about the Fed. And so we had a nice dip there. And now 1868 on Robinhood. Coinbase as well, 260. I was watching an interview with Brian Armstrong this entire morning, and gave me a little bit of a newfound respect for what he's done in building Coinbase. We'll talk more about that later, but right now, Coinbase up 2%, 262. Bitcoin goes up, Coinbase will go up. S&P 500, I cannot believe I am saying this. It is at $523, dude. Like this is just incredible for the S&P to be at this level, but this is where we are at. And now for the bears saying 3,600, I mean, you got to readjust. Even Liz Young is starting to get to the point where she understands inflation is sticky, but we've got to readjust some of these expectations. Truist 37.33, Enphase 114, KRE Regional Banking ETF 49.43, Micron. Oh my God, I forgot about talking about these guys in the beginning of the show. They had earnings yesterday. And boy, did they execute. We'll talk about them in just a little bit. But Micron, they surprised with an $800 million profit. No one thought they would put up $800 million of profits, which again goes to the point. This is a company that went public in the year 2000. They are breaking out today because AI is real, demand is real, chips are real, semiconductors are real, and NVIDIA and AMD and SMCI are not going to be the only beneficiaries. A company like Micron Technology is going to benefit because they put up the numbers. And my theme currently over the past couple of weeks is if you're putting up the numbers, you're getting rewarded. So right now, Micron is up. We'll talk about them in a little bit. Shopify is up about 1%. ARM is up 3%, 135 on ARM, 138 billion. This is one of the only companies in the market I really think is overvalued. But right now, 138 billion on ARM. SMCI back to 936. It was at 858. It was at 858. It was at 850 freaking 8 yesterday. Now it's at 934. Oh, where's NVIDIA? I forgot about NVIDIA. I'm going to guess NVIDIA's 915. Wow. 922. Wow. And it's holding 922. It's not like every time NVIDIA gets to 900, it just like immediately starts to make its way back down to 880. It's holding 921. There you go. SoFi 747. That's up 1.4%. Robinhood now red on the day, 1855, still above 1850. I like that. We will see people take some profits here and there. Definitely throughout the entire market. I think people will take profits on stocks that have run up a lot, but then we'll see if those dips end up getting bought towards the end of the day. Duolingo 238 up 1.71%. T-Doc that's up about 1%. MicroStrategy up 4% of the day, $1,600. MicroStrategy fell from 1,800 to 1,200, right back up to 1,600. You're either enjoying the volatility, you either hate the volatility, or you were fucking born in the volatility. And if you're born in the volatility and you can handle the upswings and the downswings, you are making some money on MicroStrategy. The crypto stocks, CleanSpark down 2%. That's okay. It was up 22% yesterday. Coinbase is up about 1%. Bitcoin 67,415. Ethereum 3,500. Hut 8 mining is up. IREN is up. Marathon is down about 1%. Bitfarms up about 0.6%. And MicroStrategy again up 4.23% on the day. Celsius, we got Chris in the chat. Let's see how Celsius is doing. 92. Celsius is up 1.74%. Celsius benefiting from these potential 3 rate cuts, which is what the market is reacting to. Palantir just fell below 25. 25 is still hard resistance, 24.94. So that's okay. But if we can hold this 24.90 range, hold the $25 range, I still think that would be good. Okay, breaking jobless claims. Jobless claims breaking. The number of people claiming unemployment benefits in the United States fell by 2,000 to 210,000 on the week ending March 16th, below market expectations of 215,000. That means, in layman's terms, the market was expecting more people to claim unemployment, which means they need money from the government, right? And less people claimed unemployment, which is technically a very good thing for the markets because that means people are getting jobs. They have those jobs. They're spending that money. They're spending that money. Products and services are being circulated throughout the economy. Stocks can go up. Not the best news for inflation. And it seems like the market is not really interpreting good news as bad news because, stocks are still up as the market opens. But that is one thing to look out for, that if there are still less people unemployed, again, Jay Powell kind of wants to see more people unemployed to really cut rates. The reason we haven't cut rates yet, remember in January, everyone thought there's a 77% chance it would happen in March. Now, we don't even know if there's a 1% chance it's going to happen in June, is because the economy is doing really good. No one thought the labor market would be this tight. The labor market being this tight is helping ease up the Fed's need to cut rates. Now, that does mean that also, there's an argument that wage price inflation might not happen as aggressively because if the labor market is tight, it's more competitive to get a job, which means if it's more competitive to get a job, you can't ask your employer for a raise because they'll just hire somebody else. On the opposite side, if the Fed is lowering the rate of quantitative tightening, that may, make jobs a little bit more lucrative, which means wages tend to go up. Inflation tends to go up. Companies don't raise their prices. Jobs have to adjust with the cost of living. So wages have to kind of go up at least a little bit. And that could hurt overall CPI. We'll see how all of those macroeconomic data points end up over the next 6 months. But as of now, the market's bullish. PayPal 65, 61. And they really don't think that inflation is going to be that big of a concern. So that's what we got right now in the context of the broader markets. Matt Money in the chat says almost up 50% total portfolio since 2022. That's absolutely incredible. Absolutely incredible. I mean, look, if you're long some of these big names, I know Matt, his portfolio is concentrated across a lot of the sort of Mac 7 names, Google, Amazon, etc. His one riskier bet is Rocket Lab, which is up 5% today as well. Did they have a successful launch? They had a launch today, right? At like 4:30 in the morning or 2:30 in the morning, Rocket Lab. Matt, if you're still in the chat, let me know if they had a good launch or not. I think they did. I'm looking at the NASA tweet right now. That's probably why they're up 5% as well. Beautiful morning launch. Wallop supported the successful launch of Rocket Lab's Electron carrying a mission for the National Recon Offices or Reconnaissance Office Thursday, March 21st at 3:25 a.m. from Virginia. All right, so Rocket Lab, good launch. And if you're long and strong companies like this over the long term, which is what Matt has been like, since 2022, portfolio ends up doing well. Chris says, I still haven't done Coke. I'm going to try some on my 40th B-Day. Chris, if you want to keep shorting Palantir, you're going to have to get used to it. You're going to have to get used to playing with it if you're going to keep short Palantir. Any takes on Archer Aviation Emit? I am not particularly well familiar with this stock. It's up 2%. I do think they got crushed because they SPAC'd $1.61 billion. I don't know the financials, so really can't make an opinion on this. Two things I do know. Kathy's been buying a crap ton of this stock. She bought a lot of Unity, by the way, yesterday as well. And this is a company that's SPAC'd, which is why they've been hurt, because all the SPAC stocks, including SoFi, have got hit since 2021. So I don't know if it's undervalued or overvalued. It was $1.62 in January 2023, so it's up 5x since January 2023. It's done very well. But obviously, shareholders who bought it really high have not done that well. So I'll have to go deeper into these numbers, but this one seems exciting. I just don't know how big of a sort of innovative they are in the aviation space. Palantir does have a partnership with them. They are leveraging AIP and Foundry. They were at AIPCon presenting how they're using Palantir software. So that might be another bull case for why they're going to be pretty effective. Unity right now, their stock, $27.75. They're up 2%. So Unity is up. Amit, NVIDIA versus NVDL. So NVDL is the leveraged ETF, right? 2x long NVIDIA. Yeah. I would stay away from this because if NVIDIA takes any bit of a dip, this thing's taking a massive crash, right? The reason this is up like 200% year to date and NVIDIA is up 80% is because it's leveraged 2x against NVIDIA. So I get it. But I mean, if things turn the opposite direction, you just got to be ready for that. So it's not really like bad or good. It's just if you're bullish NVIDIA, you have to be bullish NVIDIA at $915 because this thing's not going, this at leverage ETF from 43 to 50 if NVIDIA doesn't go from like 915 to like 930, right? So you've got to see a lot more momentum in NVIDIA. And from these prices, I don't know how much juice is left to squeeze. Is $1,000 a share possible? Probably. But beyond that, I don't know. And I think NVIDIA really has to crush their next earnings, which they probably will do to justify that $1,000 per share. PayPal holding up 65.80 right now. Robinhood as well, 18.65. Palantir back above 25. There you go. Back above 25 for Palantir on the day. Not bad at all. Not bad at all. When do you think the S&P will pull back? Again, so I've been saying this for the past couple of days. I said it this morning in the beginning of the show. I don't think we need to have a massive pullback on the S&P. Could it happen because people take profits? Yes. But the reason the S&P is up at this point 11% year to date, the S&P barely averages 8%. If you just look at its historical track record, is because companies are executing and they're executing against the thesis that the market cares about, which is AI and crypto. Every company to some respect is leveraging AI. So even if they're not an AI play, I mean, I was listening to MasterCard yesterday talk at NVIDIA's conference and they were like, look, fraud, risk mitigation, accounting, finances, auditing, all of this is being done in a more effective way because of AI. And so if companies are able to prove that, their earnings are going to go up. The market kind of has a choice between 5% or MasterCard, that is kind of like a boring company, but they're resurging in their growth because of AI. They're going to pick MasterCard, right? They're going to pick equities that are actually proving the results. So I think the S&P doesn't have to pull back. Could it pull back? Yes. But everyone that's saying, oh my God, we need to have a crash. It's like we had a crash in 2022. We've all been through that. And AI has reemerged as like a real thing. Micron is a real thing. Speaking of Micron, let's get to that. And as a result of that, I think that the market now is realizing that maybe we need to buy equities versus being scared of not being in this market because there's supposed to be some magical crash that is not happening. Micron, let's talk about that. This was an incredible story. This was an absolutely incredible story. So Micron lost $1.2 billion last quarter. This quarter, and by the way, the quarter before that, they lost $2.2 billion. So just losing money hand over fist. They were losing money because they were investing in growth. And this quarter, they surprised with a $793 million profit. $100 billion market cap. This is a company that deserves to go up, not ARM, even though I think ARM's great, but like this is a company that's actually putting up numbers, right? ARM is not really putting up the numbers yet. And this is a company that's going to benefit from AMD, NVIDIA, and SMCI going up. If ARM is going to benefit, then a company that's putting up the numbers is definitely going to benefit. They also beat revenue expectations by about 500 million. Market was expecting a little under 5 billion or right above 5 billion. They put in 5.8 billion. So the stock was up 11% after hours. We'll go to it right now. To me, if you're not in Micron, it doesn't matter. What matters is that the thesis around AI is playing out. And that thesis, S&P is looking like it's trying to hit 524 right now. That thesis is that demand is real. Micron right now up 14%. And if that demand is real, we have to take that demand seriously because that demand is going to implicate and permeate itself throughout every factor of this stock market, every company that exists. And that's something that we have to pay attention to as market participants because that means there's going to be some good opportunities. SoFi, 750, up 2.1%. If you missed Noto yesterday, PayPal, by the way, $66. We are back at $66. Let's see if we can make a run for 70, hopefully over the next week or two. It seems like the narrative is starting to change and maybe people are getting more excited about PayPal. If you missed SoFi Noto on Kramer yesterday, he basically said, look, we're refinancing our debt. The market overreacted to the fact that we're refinancing our debt. It's not that big of a deal. He was able to pump it after hours. Right now it's up 2%. Let's see if the market holds that. But Noto was pretty bullish yesterday. I think he cleared up a lot of concerns and hopefully the market responds to that as well. Chris Patel says, I might have to take a trip out to Colombia with Amit. If we go to Colombia, Chris, I will still have my Palantir shares with me. So I will not be able to engage in any of the activities that you engage in. No matter how much you tempt me, I will not be able to engage in those activities. Robinhood right now, where are we at on Robinhood? 1880. 1880 on Robinhood. Look, it makes sense. It makes a lot of sense that Robinhood's up right now, and I think the market's rewarding it. Yesterday, they introduced global Android wallets for crypto. They got 10,000 downloads within a day. Robinhood's executing, and I think if Bitcoin continues to maintain its momentum, then Robinhood's going to benefit from that as well. Speaking of Bitcoin, let's get an update on what's going on with the Bitcoin ETF. So yesterday, we didn't have a ton of inflows, but we also didn't have a ton of outflows. I mean, we did have a ton of outflows, but it was kind of, it was kind of massaged by the inflow. So Grayscale had about 386 million of outflows. Ibit, BlackRock had 49 million, Fidelity at 12 million, Bitwise at 18 million, ARKB at 23 million. Now, something new I learned yesterday about the Bitcoin ETFs that I want to tell everybody that maybe you guys don't know is that the people that are selling out of Grayscale Bitcoin Trust, you might be thinking, okay, so all this money's leaving Grayscale Bitcoin Trust and that money's then going into the Bitcoin ETFs. That is happening, but not in the way people think it's happening. People think, okay, so I have $100,000 in GBTC. I sell it because I don't like the fees. And then I take my $100,000 and I put it into BlackRock. That's not happening. What I learned yesterday is BlackRock is buying the actual Bitcoin from GBTC. So yes, there are some people that are selling GBTC and then putting it into BlackRock or Fidelity or ARK or whatever. But the far majority of the buying, meaning the actual Bitcoins that are available for the ETFs, for the institutional holders to buy, is coming from Grayscale. Grayscale at the beginning of January had 680,000 Bitcoin. Now, why is this a good thing? The reason this is a good thing is because the supply shock for finding Bitcoin is so hard that if Grayscale was not getting offloaded all their Bitcoin, the ETFs, the BlackRocks, the Fidelities, the ARKs of the world, they may not have a place to find their Bitcoin. There is a legitimate supply shock happening. Even if Bitcoin is going down, the supply shock is actually very real in the context of what's going on with Bitcoin. Coinbase yesterday admitted that they hold a 90% of the institutional custodian buying power for these ETFs. So BlackRock's going to Coinbase. Coinbase is going to Grayscale, and they're saying, hey, do you have any cocaine? Do you have any Bitcoin? Because we need to buy it because we have way too many inflows. So technically, even though Grayscale is selling off, it's actually good because that money's being transferred and it's giving supply to the broader Bitcoin ETFs. And once Grayscale is done, I think there's like 30 days left of Grayscale selling off, which conveniently is in time with the halving event in 38 days. You're not going to have any more massive selling from Grayscale. All that money is going to be in the BlackRock, in the institutional ETFs. All those Bitcoins are going to be held up in those ETFs. And now the inflows that come into the ETFs are just going to be net inflows versus having to be offset by the outflows from Grayscale. So interesting stuff in the context of what's going on with the broader Bitcoin market. Snowflake 167. Snowflake seemed to have bottomed at around 152. Right now up at 167, up 2.63% on the day as well. Intel is up 3%. The reason why Intel is up, if anyone's confused, is Biden is basically giving them $20 billion of subsidies for making manufacturing plants in the United States. So markets responding pretty nicely to Intel. Now I thought they would be up a lot more than that, quite frankly, but Intel is up and markets excited because they're getting some subsidies by the US government to continue manufacturing chips, which is once again proving AI chip demand is real and it's not going away. It looks like anytime soon. But DWAC, let's look at Trump's company, Trump's SPAC. DWAC, wow, up 8%. It was up 20% yesterday. So this bad boy continues to go higher. NVIDIA right now, 911. What's going to be very interesting to me by the end of the day is, can NVIDIA hold 900? Because so far, NVIDIA has sucked at holding 900. And I mean, look, there are people literally around the world right now. Some of those people might be in the chat. Let us know. Don't be afraid to let us know. You can say it in the chat, that are buying NVIDIA at $914 a share. There are people around the world. You see all these buy orders coming in on the right-hand side of my screen. There are people buying it. The question is, can it hold? Because every time people end up buying it at above 900, it just tanks right back down to 880 because the market's kind of like, all right, like we've had enough. And so today is going to be interesting. After what the Fed said, can NVIDIA finally retain these gains? Right now, NVIDIA year to date is up 85%. I'm looking at it right now, 85%, which is just incredible. We got Phil Masters in the chat, says he's buying at 900. Look, I don't blame you if you're buying at 900 because I think long-term NVIDIA is going to be fine. But we do need people to keep buying it at these levels for it to sustain, or else it's not going to be able to stay there, right? And so we'll see. We'll see if that happens. John says giving $20 billion isn't that bad for inflation. It's not really giving $20 billion. It's more so subsidies. So it's a combination of tax cuts. Yes, there's some money that they're giving, but it's more of an investment to Intel than giving money. Now, speaking of giving money, the Biden administration didn't really give NVIDIA $20 billion, but they did give some other people money. This morning, the Biden administration gave out $6 billion. And you might be asking, well, who do they give $6 billion to? They gave $6 billion to people who have student debt. President Biden forgave student debt for another 78,000 borrowers this morning. Nearly 400,000 more could receive it within 2 years. Now, before everyone says, oh my God, the Democrats are just giving money to people, yada, yada. Yes, I understand that argument is well heard and understood. The one caveat here is that the only people that are getting this money are people that have done 10 years of public service work. So if you've done 10 years of public service work, which means you've paid off your student loans on time with your monthly interest payments, and you've served in the public sector, nurses, firefighters, teachers, etc., your debt is being forgiven to an extent. Not all of it, but like 75 to 85% of it is being forgiven. So this is debt forgiveness that I actually think is kind of reasonable. It's not that insane for him to forgive. I think even Trump wanted to do it's called the PSLF, the Public Loan Forgiveness Program, Public Service Loan Forgiveness Program that exists. And it's been around for like 20 years. These are the people that I think are working their asses off and getting some benefits is not the worst thing in the world. It's not going to the people that majored in like dance class and they can't find a job and, they have $40,000 of student loans. So I think it is a little bit of a different forgiveness program. Now, Biden did want to give those people, including me, right? I have $10,000 in student loans. I've been paying it off over the past couple months. If he gave us $10,000, which he was going to give, which would have printed about $400 billion, that would have been not the best for inflation. That would have given people like me who have, $10,000 in student loans, that would have taken care of all my student loans. And it wouldn't even put in a dent. The people who have like $100,000 in student loans, 10,000 wouldn't have even put in a dent. So to me, if you got rid of, $400 billion of loans, there's 1.7 trillion. You're really not making a dent. So it wouldn't have been an effective policy and it would have caused inflation. However, public service workers that need to like buy a car, buy a house, and they've been, working in the public sector, forgiving their debt is not the worst thing in the world. Granted, people still don't like it. But it's not, in my opinion, as egregious as just like forgiving someone who majored in dance their debt. Chris says PSLF came out under Bush. Okay, so it actually came out under a Republican administration. Interesting. Okay. So we talked about Intel, we talked about Reddit, we talked about Bitcoin, talked about Palantir, we talked about the Fed. Let's pull up another thing that I wanted to show you guys here in the context of what's going on with Apple. Apple is now being sued by the government. Again, they got sued for $1.9 billion by the EU. Yesterday, after hours, there is a new antitrust suit against Apple. Here are the details.
Apple are under pressure this morning. Bloomberg reporting that the Department of Justice could soon sue the tech giant, maybe today, as soon as today, for allegedly violating antitrust laws, which are they not in the eye of the beholder more than ever these days? Steve
With this DOJ, yes.
Yeah, with this DOJ. Joins us now with more.
Yeah, I think the big thing we should be looking for, if this lawsuit does in fact happen, is then where the App Store falls in, because there's this idea that this Epic Games lawsuit that worked its way through the courts, whether or not that kind of resolved the issue about the App Store dominance, that whole thing, the payments that they collect from the developers and so forth. So to what degree does the DOJ go after the App Store? Huge lucrative business. But beyond that, there are some like subcategories that they're likely going to go after too. The payments, like we were talking about last hour. And also, are you guys for, the AirTags, those little...
I've got a few of them. I don't know what to do with them.
So there's this company called Tile that makes a competing product. Companies like that, they are upset because they don't get necessarily full access to iOS and all the same features a product like AirTag.
Can I have my dog swallow it?
Yeah, people put them on their dogs, but
they do.
Yeah.
But
you're not supposed to do that, but
why?
That's what they say.
Put in the chat if you use AirTag. I've never used it before, but let me know if that's actually useful as a product, because I've never really experienced it.
You're not supposed to track your pets or people.
Kid.
They don't want to be responsible when
put
you
it on their kids' backpacks.
Yeah,
and the backpack is a good idea.
Yeah, they do that.
So there was a headline from NPR, September of last year. United States takes on Google in biggest tech monopoly trial of the 21st century. Does this top that?
Yeah, I feel like it does, at least thematically. I mean, first of all, Apple is a bigger company, hands down. It's a more beloved brand. And here you have the full force of the Department of Justice coming after their own, our own company. And it's also happening at a really interesting time. If you think about it, we're at the cusp of this AI revolution. There's this idea that, Apple is behind on AI, doesn't have a coherent story or a good consumer facing product. And then let's rewind back to a couple decades ago when Microsoft was going through this at the cusp of the mobile revolution. Right. And people were saying, oh, they missed out on this because the government went after Microsoft and therefore they missed the mobile revolution and so forth.
Bill Gates has said that.
Bill Gates has said that.
He had his eye off the ball. He was focused much more on
exactly.
Washington.
And so then you got to wonder, does this become a distraction for Apple?
In the middle of the AI revolution.
Exactly.
Where it's
okay, so Apple has not, interesting. So I actually misinterpreted it. Apple has not gotten sued yet by the DOJ. But Bloomberg is reporting that the DOJ is going to sue them like very soon. So they haven't officially gotten sued yet. So that's why they don't have any details on what the lawsuit is about. It is an antitrust lawsuit, so it's going to be something around competition. But the DOJ is projecting to eventually do it. And as a result of that, it seems like Apple shares are under a little stress. Let's go back to the markets and see what's going on. So we might get news of that by the time of the market close. NVIDIA 910 still holding up. Tesla down at 175. We'll talk about Elon Musk and Neuralink in a second because that's big news as well. Apple right now, wow, it's actually down 1%. Apple's down. So this news, Apple should be ripping on this news or on just interest rates macro in general. Apple is actually down because of a potential lawsuit. I wonder what they're going to get them for when it comes to antitrust. I wonder if it's going to be Chargers or the App Store. I wonder what they're actually going to get them for. Will be interesting. I've never used AirTags before. Everyone in the chat says they use AirTags. Honest Joe said I put AirTags on my girlfriend to make sure she's not cheating. That's a little a Joe from you, don't you think? By the way, I was looking at on Instagram yesterday, the You Netflix account. For those that haven't watched that show, it's about this guy who's like a stalker, murderer dude for his girlfriend. They posted a picture of him, and I realized when I grow up, I want my aesthetic to be Joe from You. That's what I want to look like. Like I need to lose some weight. I need to get skinnier, and I probably need to grow out the beard a little bit, maybe again. But I want my aesthetic to be this guy. This guy is the sexiest man on planet Earth. Tell me this is not the sexiest man on planet Earth, dude. I want my aesthetic to be like him. Look, without the beard, still beautiful. Obviously, the jawline is incredible. I don't have that jawline, but with the beard, beautiful as well. So I think when I grow up, I'm gonna try to look like this guy. This is like my man crush. This is the guy that I made. Doesn't beat Alex Karp. Doesn't beat Alex Karp. We're not beating Alex Karp. Okay. But that's the aesthetic that I want to embody. Okay, let's talk about Elon Musk, Neuralink. So Elon put this out yesterday. This is what Neuralink has done. They have put in a chip inside someone's brain, and that chip is leading to a lot of progress within their brain. Let me pull up the exact details right now. I have the video loaded up here. So this person is demonstrating telepathy. They're controlling a computer and playing a video game just by thinking. And here's the video of that person actually having Neuralink work. We'll talk about the implications of this in a second.
At Neuralink. And I'd like to introduce you to the first ever user of the Neuralink device. And I think you're my only telekinetic friend that I have.
Yeah, I hope so.
Not many more of those out there. You want to introduce yourself?
Yeah, my name's Nolan Arbaugh. I'm 29 years old. About 8 years ago, I was in kind of a freak diving accident and dislocated my C4, C5. So I'm a complete quadriplegic. So I'm paralyzed from below the shoulders. I have no sensation or movement below my level of injury, so below my shoulders. Yeah, that about covers it, right?
Do you want to introduce some of your dogs here? Let me flip
Yeah,
the camera so you guys
absolutely.
can see. You got dogs all over the place.
Yeah, that's Montana. The one walking by is Grace. Gracie.
Gracie, come here.
Hi, Grace.
How's it going, Gracie? Yeah. All right.
This is what people do.
Yeah, they just here for the dogs. All right, yeah. So while he's been introducing himself, let me just flip the camera on so you can see what Nolan's been doing.
Yeah.
Let me come over here. Do you want to explain a little bit what's going on here?
Yeah. So
This stuff is pretty incredible.
I love playing chess, and so this is one of the things that y'all have enabled me to do, something that I wasn't able to really do much the last few years, especially not like this. I had to use like a mouse stick and stuff, but now it's all being done with my brain. If y'all can see the cursor moving around the screen, that's all me, y'all.
Guys, that's his brain imagining what chess piece to move. I mean, like, I can't even believe I'm watching this, dude. This is like insanity, but that's happening because of Neuralink.
It's pretty cool, huh?
Actually, can you pause the song just for the audio coming through? And that was also
He just paused the song through his brain.
done with your brain.
Yep. It's all brain power up there.
Can you explain a little bit just to people who maybe don't have any context on this field or what's going on here? How are you able to actually move the cursor?
Yeah, so we started out with trying out a few different things. We basically went from what we call kind of differentiating like imagined movement versus attempted movement. So a lot of what we started out with was attempting to move. So I would attempt to move, say, my right hand, left, right, forward, back to move. And from there, I think it just became intuitive for me to start imagining the cursor moving. Basically, it was like using the force on a cursor, and I could get it to move wherever I wanted. Just stare somewhere in the screen, and it would move where I wanted it to. Which was such a wild experience.
This guy wants to know if you feel like a wizard.
Yeah, right. It's crazy. It really is.
So I'll put the full link in the chat for anyone who wants to check it out. Yeah, I mean, it's pretty damn incredible stuff, dude. Like, seeing that happen was just incredible for me to see. Here's the link right here in the chat. Now, as a result of that, you got to ask yourself a question. What is Elon planning to do? What he announced last night as a result of Neuralink is now he's trying to cure people who are blind. Elon Musk announced Neuralink's next product would be called Blindsight. As the name suggests, Neuralink's next device will recover or restore vision. A few years ago, Elon Musk stated that Neuralink would be able to restore vision in humans who are blind. He was confident in Neuralink's capabilities. And Now he says that if you can read signals from the brain, you can be able to rewrite those signals. You could potentially allow them to communicate with your nervous system, and that could potentially cure blindness. It's pretty incredible seeing this stuff. And the reason this is incredible is because when you think of Elon doing Tesla, SpaceX, Boring Company, Twitter, and now Neuralink, which literally feels like magic, it makes you remember how much you love Elon and how much you just want him to win and how much he's the embodiment of innovation and humanity just never giving up and constantly trying. But then you look at Tesla stock and you remember that, well, Tesla now down 1% of the day. Tesla's in a little bit of trouble because of these gross margins and these volumes and these deliveries. And either you have two perspectives. Either number one, you have the ruthless investor perspective, which is I love Elon as an innovator, but the Tesla stock is screwed right now and it's going to be screwed for the next couple quarters, at least until rates come down. Or you have the don't bet against Elon vibes. Somehow Tesla's going to survive this pretty tough rate environment over the next 6 to 7 months, and they will not fall to the $130, $140, $125 range that Wells Fargo is projecting because Elon is Elon and he'll figure it out. I don't know what's going to happen, but when you see Elon execute against things like Neuralink, you just want to you remember that it's still Elon. How could you bet against Elon at the end of the day, especially while he's doing it while running Tesla and SpaceX? So pretty incredible stuff, and we'll see what ends up playing out from there. But right now, that's what we've got in the world of Neuralink. Tesla down a little bit. I had a feeling Tesla might be down because at the end of the day, although Jay Powell was dovish, rates are still up. They did not cut the rates yet. And if they're not cutting the rates yet, I mean, Tesla's still not going to get the benefit of a loosening cycle. So the market can front run it, which is fine. And I think 175 to 180 is great. But I don't know if it's going to help in terms of their Q1 projections or what they eventually will say for Q2. So we'll see how that plays out from there. Apple 176, they're down on that news about the antitrust violation or the potential lawsuit. Robinhood 1883 up 1.54%. Snowflake is up 166. DWAC, Donald Trump SPAC up 5%. Let's look at Google. Google 150. There you go. Google's back at 150. There you go. Google was struggling to maintain 150. It was at 147, 148 today as the market turns a bit more bullish. Google is at 150. Amazon, I don't think we've seen 180 on Amazon in a while. It's been stuck at 179 for the longest. I think this is a new 52-week high for Amazon. Yeah, there you go. 52-week high. It was hit today, 181.42. Amazon's up. NVIDIA holding 912. Meta 508. And Microsoft all-time high as well. Only thing that's down today is Tesla and Apple out of the Mag 7. Also, FSD, correct. FSD is next level. And, if FSD is really what everyone says it is, then the market probably is undercounting how much that's going to impact on the revenues. Crypto stocks are up. Robin at 1891. Let's see if we can make a run at that $19 range that we got to on that February data a week ago. CleanSpark up 1%, $20.46. Coinbase 268 up 5%. That one's up. Bitcoin 66,745. That's down a little bit from where we were this morning, but it is still up from 2 days ago. And MicroStrategy up another 6.5%. Right now it's $1,647 on the day. In Musk we trust. I think a lot of people are trusting Musk right now at these levels. Look, if you're buying Tesla at 170 when it was just at 161, people that are buying it right now, assuming that 161 won't happen again, they are starting to get a lot more bullish on Tesla. And maybe that 160, I tweeted this yesterday, maybe 161 was the dip. A lot of people, including myself, are like, 150, 155, 160, low 160s, that could happen. Well, it happened in the low 160s, and maybe we don't get it again. So we'll see how it ends up playing out for Tesla. But if the dip is gone, then people are going to buy because people do not want to miss out on this story. What else do we have? What else do we have right here? Google's eating the Reddit data. That's true. Yeah, that's that's definitely helping train their proprietary models as well. But we got a Gunjan on CNBC. Let's see what she has to say about the euphoria in the markets and why the AI trade is working out really well for people that are betting on the broader equity markets. Here we go.
Major indexes. And just zooming out a little bit, when I talk with investors, when I look at positioning across a range of assets, what you're seeing is people really embracing this rally, embracing what Powell said about, higher economic growth this year, lower inflation in the future, less of a risk of higher unemployment. We're seeing that across the futures market, the derivatives market, the stock market, of course, where futures positioning across the S&P 500, the NASDAQ shows that asset managers haven't been this bullish. Since 2019, net bullish positions are hovering around some of the highest levels in years.
All right, so Jeff, I'm going to come over to you. A lot of bullishness in the market, but I think the question a lot of people are trying to figure out is, do you want to play the broadening of the market? We mentioned earlier in the show, 80 S&P 500 companies hitting a 52 or all-time high, or do you want to get back to that tech trade? Does that have more room to run?
Well, I think it's fascinating, Frank, and I do agree there's a bullish sentiment. I'm cautiously optimistic. However, I think the input into the recent bullishness, let's think for just 1 second. When we saw the S&P 500 go up to 4,800, it took nearly 2 years to go from 4,800 the S&P 500 up to 4,900. Now we've seen the S&P 500 go from 4,900 above 5,200. It looks like it's going to trade 5,300 today in about
That's a good point.
50 trading days. So I think the bullishness that's being expressed right now is more chasing. You're seeing nearly $7 trillion in cash chasing this market higher. And with Fed Chairman Powell green lighting the marketplace, we are seeing a little bit of March Madness. So I take a little bit of pause here with the S&P 500 at new all-time highs and the VIX at 13. So I think you have to be cautious here, but cautiously optimistic. But remember, Frank, we do not see markets move straight higher. And that's what we've seen since November.
That is what we've seen.
Okay, we have some new Palantir news that just broke. Again, what Gunjan said is just that the market's excited, the market's euphoric, and my argument is that the market's euphoric for a good reason. The numbers are there, and if the numbers aren't there, your stock's not going up. So I think that's euphoria that's controlled in a reasonable way. Robinhood right now, 1890. We'll keep an eye on Robinhood and see how that goes. So Shyam Sankar just tweeted this about 20 minutes ago. So here's some new Palantir news. Accelerate your enterprise with AIP now. Battle-hardened solutions, workflows, apps, and beyond across industries and functions, a click away. Okay, so what is this? What is AIP now? Okay, so here it is. This is a brand new website, a brand new page on Palantir's website, AIP Now. So it looks like there's a variety of different verticals. You've got construction, energy, aerospace, and there's a bunch of videos with the use cases on all these verticals. Interesting. So they kind of made a centralized hub of all the different verticals that are using AIP from their clients. And they basically showed, if you're in media and telecommunications, here's all the different ways you can use AIP. Are these YouTube videos? Oh, no, these are actually slide decks. Some of them are videos. Some of them are slide decks. This is actually really cool. Wow. Dude, this is a lot of content. So right here, there is a significant amount of content. They're basically showing you different slide decks on how you can use different elements of AIP for different verticals that they exist in. What this is probably going to do is get people that were interested in procuring Palantir software to just explore the website. It's nothing that crazy other than people looking at different videos and different archetypes they have on how Palantir is operating. Put that link in the chat if anyone wants to check it out, aip.palantir.com. So another way they're choosing to market AIP. So not too bad. Nothing too crazy. Yeah, it's basically AIPCon on their website. Yeah, in a much more managed and centralized way. It's better than just having it on a YouTube channel, basically. Oh, we got Robinhood 19. We got Robinhood 19, dude. We got Robinhood at 19. Let's see if we can hold that bad boy. We got the hood at 19. We got the hood at 19. We did it. We did it, Joe. We did it. We got it. Literally. Joe Biden, Jerome Powell, whatever Jay you want to say, we got it at 19. Jerome Powell said rate cuts are coming. The market was like, wait a second, if rate cuts are coming, people are going to be trading. If people are going to be trading, they're going to do it on Robinhood, which means we should buy Robinhood. There you go. There's Robinhood. It got it. We got Robinhood at 19. Not bad. Not bad at all. So we got Robinhood here at these levels. Now we just got to see if we can maintain these levels, and that would be a good thing. Here is an update on the main 2026 position I have on Robinhood. This one is currently up 40 grand right now. So that is the 2026 position. That is up 150%. And I mean, look, we have, these are $15, $20 calls till 2026. So we have some time on these. So let's see it play out. I think Robinhood's going to have a good year. I think 25 at the end of the year is very possible. And if that's the case, this position should do well. Let's see. Now we got to see if we can break 20. Once we break 20, I also think people will want to buy it more because then they're going to be like, all right, it's at $20. It's, it's getting to that range. It's like at 20. It'll feel like Coinbase at like $40, $50. And so I think people will buy. And we got to break 20 though. Psychologically, it's very important to break through that $20 level. And if we can do that, I think the market will be, relatively excited for that level. So let's see if we can get there. Are you streaming the Reddit IPO emit? No, I think that's gonna happen in the middle of the day. I'll cover it on the market close, but not going to be streaming it on the actual IPO day or at like 10 p.m. or whatever. But around the market close, I'll cover it. Mark says, how do you not sell that now? So it's really interesting. It's actually a really good question. I was up around 30 grand on SoFi when that popped, and this actually transitions me into another thing. So let me before I answer that question, let me share this with you guys. So I have officially made a trading tracker. Here it is in the chat. You can bookmark it. This is my sheet, and I made a Twitter account for it as well. Let me get the Twitter account. It's called @trades_. I'm not going to be posting on it a lot, but the goal of this account is literally to document my trades. So I said this yesterday on the market close. I'm going to be starting with a $500,000 paper trading portfolio. And this portfolio is going to be pretty simple. It's going to be very simple to follow along. I'm going to have a ticker. I'm going to have either cash secured puts or covered calls. I'm going to have the paper trade, the date I opened it, the expiration, the premium collected, the collateral I had to put up. I'm going to go back once the trade expires, and I'm going to say, is this a successful trade? Also, let me add another tab right here. Expiration. Oh, no, I have expiration. I was going to put date it ends. I already put that. Okay, so I don't need that tab. And then successful trade, and then notes on the day of opening trade, notes on the day of closing the trade. So this trade tracker is going to be my journal into basically determining if I'm good enough to trade the wheel. For those that don't know what trading the wheel is, that's okay. I'll explain it in many future videos. But for the next 8 months, I want to see, can I take 500 grand? And the rules are, can I end the year with at least 10% on that 500 grand without losing the 500 grand? So the goal is 500K. I want to make 50K on that 500K in profits without losing the 500K. All the trades are hypothetical, so do not follow me into them. It's not my real money. I'm literally throwing around 80, 100,000, 900,000, 400,000, whatever, and I'm playing around. So it's literally a game to me. Do not follow it thinking that it's going to actually work. And the idea is to understand if I understand price direction really well when it comes to trading the wheel. I think if I can successfully do this, then I will be able to trade the wheel by the end of 2024, going into 2025 with my own money. But right now I want to see if I can do it. So this is the account, @trades_. Ghirardelli Brownies is the profile pic. Vlad is the banner pic. It is what it is. You can follow it if you want. And I'm just going to be trading there. The goal is, and this goes to the question you said. So the question is, why don't I sell Robinhood up 40 grand? The reason for this is because I was up 30 grand on SoFi when SoFi was $11 and I didn't sell. And that was a mistake. I made the mistake of not selling. And I made like $1,000 off the trade with the same call debit spread strategy that was back in July of 2023. What I told myself at that moment when I lost the 30 grand on paper and I didn't take the profits is that I'm going to do this again. But next time I do this, I'm going to actually sell. And I'm going to make a lot of fucking money because I was really upset that I didn't take 30 grand of profits. Obviously, SoFi fell from $11 to like $6, and you feel like a schmuck because you were up 30 grand. Why don't you take the profits? So I told myself in end of 2023, I'm going to do this again. I'm going to find a company that's deeply undervalued. There's going to be an asymmetric bet. I'm going to bet big. I'm going to make money, and then I'm going to sell. Well, what happened is I did sell. I had 450 of those debit spreads you were looking at. That's down to 350. I sold 100 of them. So the idea is not that I didn't sell. The idea is I've understood the company when it comes to Robinhood so deeply that I have enough conviction in my due diligence that is justifying me not needing to sell. SoFi not selling was a mistake because SoFi didn't deserve to go to $11 in July 2023. SoFi was just pure BS momentum. We got into Robinhood at $8. Robinhood deserves to be at 19. Robinhood probably deserves to be closer to 25. So to me, it's not a question of like, oh, just sell and take the money because that's a sort of immature mindset. It's, if you're selling, is there a reason to sell? And by the way, I prematurely sold the 100 debit spreads from 450 to 350 last month. I shouldn't have sold those because the momentum was on the side of Robinhood. And there's actually a narrative there. So to me, to answer your question, the reason I'm not selling is because there isn't a reason to sell given the momentum is on my side. And because I'm so deep in the money and there's so much time for expiration, really, we have a long time to have this thing play out. And barring any sort of crazy macroeconomic, disaster that happens, Robinhood should be okay. So that's the reason I'm not selling, and I think we're going to see this thing play out over the next 2 years. And also, Robinhood's just fucking executing, dude. And I don't want to go through the whole thesis, but you guys know if you follow me on Twitter, they are executing, and I don't see that execution slowing down. And also, Bitcoin goes up to 100K, 80K, 90K, Robinhood's going to benefit from that as well. So that is the logic and the mindset behind that right now. If you're using the wheel strategy for a 10% return, you may as well put that into the S&P 500, aren't you? Well, look, I'm saying 10% conservatively. I'm trying not to be like the most, egotistical guy saying I'm going to get 50% on the wheels. Like I want to see, can I make 10%? If I can make 10%, I feel, happy. And then, if I can make 10%, I think I can make 20 to 25%. But the first thing is, can I at least make 50K off this 500K? And if I can, then I'll be a little bit more comfortable to see how we do it from there. How are you doing on CleanSpark? I sold CleanSpark at $16.50. I made like $1,000 on the options, and I allocated that money elsewhere. So I am not in CleanSpark anymore. I am out of that position. Also, the other thing about trading the wheel is that it's really complicated, dude. It's not easy. Like I was on the phone with Adam yesterday. I don't know if he's still in the live stream. Robinhood right now, 1903. MicroStrategy up 8%. I was on the phone with Adam, a friend of the channel, for like an hour discussing the wheel strategy. It is very complicated. Now, it's not complicated in the fact that it's rocket science. Anyone can learn it. But like to actually manage a position, and we can ask TJ, who manages it very well at a professional level with millions of dollars, you got to be on your shit managing it, right? Like it's not as easy as just dump it into the S&P and hold it. But then again, the S&P doesn't always return the way it's returned this year. So if you want to consistently make money by mitigating your risk, basically, I don't want to be the gambler. I want to be the casino when it comes to options now. I don't want to be the gambler. I want to be the casino. Bitcoin right now at 67,000, Coinbase at 272. And so I'm gambling right now to make some money. But once I make that money, hopefully by the end of the year, I want to be protecting that money. And to protect that money, I got to not gamble. I got to be the casino, which means you're going to get less rewards on your risk. But the significance of your risk is going to be much lower because you're not gambling anymore. And so I'm giving myself till the end of December to really understand the strategy and do it via this kind of paper trading way. And you guys can follow along and we'll see how it goes. And if I can do it well, then hopefully when I take my own real money, I can make it make sense. Gail says you also need to let the short call lose value to increase your gains 100%. So another reason I'm not selling the Robinhood spreads is because I have so much time expiration that until the theta decay really hits on the short end of the call, they're not really going to print. But, Robinhood's just performed so well and we got them pretty early that they printed decently, but they can really print when that short call starts to decay. And that's just going to take time. And so that's what Chris is doing on Celsius as well. Chris is up, almost 7 digits on Celsius. And he said that publicly, right? But he needs to let it decay in order for him to capture those gains. And so it's going to take some time for that to play out, which is fine. If the company's going to execute over the next couple of years, then that decay should be okay. PayPal. Where's PayPal going right now? Where is PayPal? Is PayPal at 67? Did we get to 67 yet? Wow, we're close to 67. 66.72. 66.72 on PayPal. Goodness gracious. Robinhood 1910. They're up 3%. Cat's out of the bag. SoFi 750. Micron up 14%. S&P 523. Nvidia's, are we still holding 900 on Nvidia? We are still holding 900 on Nvidia. 910. There we go. 910 on Nvidia. Coinbase is up as well. Michael Wilder says, wouldn't you want a gold that beats the market? Yes, I would. But I want a goal that beats the market. I'm just trying to be less optimistic because I don't even know if I'm good at this yet, right? So it's less about beating the market. It's more so about am I even good at trading the wheel? And we'll find out. I mean, you guys will follow along on the sheet. You'll see if the trade goes wrong or if the trade goes well. The good thing is it's not real money. So I just need more confidence in myself before I can say I can beat the market. Obviously, the goal is to beat the market, but if I'm going to work with some big money later next year, then I really need to know that, because if I'm not good at this, I'm not going to do it. Right. So it's kind of giving myself the 7-month journey to see if I can actually do it correctly. I'm Beneficial says, I said it a few times. I doubled down on my hood position, some of which after I found your channel a couple of weeks ago. Yeah, man. Thank you for being here. Thank you for keeping up with the content. I think a lot of people are realizing that Robinhood's undervalued. It's just it's very simple. It's a crypto play. They're executing on all levels. Robinhood 1918. And if they keep executing, the market's gonna reward them the way that they deserve to be rewarded right now. And in this economy, if you are profitable and you are growing, with these interest rates the way they are, the market's gonna reward you. And the funny thing is for Robinhood, interest rates go up. That helps Robinhood because they can give you a better APY, so they can actually attract customers and they can make more net interest income. So to me, Robinhood has the crypto narrative behind it. It is good for high interest rates. Somehow Vlad made the company profitable. They reduced stock-based compensation by $500 million last year, and they're growing 30% year over year. I mean, to me, it's just one of those companies that makes sense in the context of this market cycle. Palantir as well, 25.08. So Palantir holding above $25 right now. I was buying at 24. I think I bought like 40 to 50 shares in the low 24 range. So seems like we are here now at that $25 range. And let's just see if we can hold. Bitcoin, 67,261. It basically flipped almost 700 points. We were at 66,528 at 10:15. Wow. It's 10:20 and we're up 500 points. Incredible in the context of Bitcoin. What else do we have? MicroStrategy is up 9%. That is correct. MicroStrategy is up. What else? Why 500K? I thought 500K was a reasonable amount. It's not $1 million. It's not a small amount like 150. When you're doing the wheel, you do need a decent amount of capital. Like to get started, you don't need 500K, but like to see some decent returns, you need a couple $100,000 to really play with it, right? Because you're putting up a lot of money as collateral. So to me, 500 seemed reasonable to go with. Nvidia 913, Coinbase 274, PayPal 6670. Let's see if we can get to that 67 level. Robinhood 1923 right now. S&P at 523 as well. Also, by the way, I think I saw a comment in the chat. There will never be a course on how to do the wheel from my channel, ever. There will never be a course on options ever on my channel, ever. So for anyone thinking I'm doing this wheel strategy because I'm priming you guys up to buy my course, no, that's never happening. If I can make money off the wheel, I'm not going to make, I don't need to sell a course, dude. I'm making money off the market. Like I'm not doing that. Also, you guys know how I feel about courses. It's just a shitty feeling. So no, this is because it's a community and we're tracking the journey publicly, and I will learn a crap ton from you guys because a lot of you guys know how to do this shit way better than me. When I posted about the wheel a couple days ago, I got so many comments on Twitter by people who do this shit for a living who were giving me so much like tips and advice, and I was just like, dude, this is a gold mine. Like public sourcing your DD and like the amount of people that text me every day about Robinhood DD, about the technicals on Robinhood because I'm not that good at technicals, and they're sharing all this stuff. Like, just being in public helps with getting information. That's the most important thing, is getting the information. So I'll be sharing everything publicly and everyone will get a chance to see what it looks like. All right, Reddit CEO, the guy who made $200 million last year. Let's see if CNBC confronts him about that. He's live on CNBC. Here's what he has to say before their IPO in a couple of hours.
Media company Reddit getting ready to make its public debut right here at the New York Stock Exchange. Reddit CEO Steve Huffman and our own Julia Boorstin are with me here at Post 9, ahead, of course, of the opening bell. Julia, let me turn it over to you to begin the questions.
Thanks, David. And Steve, thanks so much for joining us here as we await the opening trade of Reddit shares. This has been a long time coming. Reddit is a 19-year-old company, and you're taking an unusual approach to the IPO itself, opening up 8% of retail allocations to your active moderators and also your active users. What kind of interest did you see from them? And are you concerned they're going to sell today because they have no lockup period?
Sure. So first, thank you for having me here. It's truly an honor to be here. It's been a journey, and to be surrounded by our employees, I'm overcome with gratitude, and for our communities to make Reddit what it is. So in this IPO, yes, we invited a number of our users and have a healthy retail component beyond that. And our goal there was to bring in, I think as is the ethos of Reddit, level the playing field, bring people in on the same terms that professional investors would. And so it's a free market. I hope they believe in Reddit and support Reddit. But the goal is just to get them in the deal, just like any professional investor would.
Well, there's been a lot of chatter on Wall Street Bets, which is obviously a very popular Reddit forum that has not been so positive. You mentioned this as a potential risk factor in your S1. Are you concerned that having this very big presence with those retail investors, very high profile presence, is going to drive volatility in a bad way?
Well, first of all, look, I love Wall Street Bets. I'm a user. I've seen their comments over the last couple of weeks, so I just send them my regards. And again, that's Reddit. Reddit is people. Reddit is a fun and special, but sometimes crazy place. And so I wouldn't expect anything less from our community.
It doesn't upset you, though? You're like, wait a second, we're going public. You guys are a part of this. You've helped us in terms of our success. Why aren't you more supportive?
Look, that's exactly, I think they've helped us get here. Reddit is nothing without our users and communities. And I think that's the beautiful thing about Reddit is they tell it like it is. But God, you have to remember, they're doing that on Reddit. And it's a platform they love. It's their home.
Dude, is it just me or did that line turn everybody off? He's like, we love our users and they're awesome. But remember, they're doing it on my fucking company's app. That's how I just interpreted what he said. He's like, remember, they're doing it on my company. And so if they're doing it on my company, they're going to have to deal with the ramifications and rules and the stock price of my app. I am not getting the best vibes from this guy. It does not seem like this guy cares that much about his users, which maybe you got to be ruthless and not care, but I don't know. I don't know if people are getting the same vibes.
Home on the internet. And look, I think it's such a privilege for I and the team to get to work on Reddit, but they really are Reddit.
Steve, one of the questions I think that's come up a lot is company's been around, as Julia said, for roughly 19 years and has not managed to be profitable in any of those years. And so what will change or has changed if you haven't been able to figure out how to get to profitability over that period of time?
Well, so first, that's not exactly true. So we have been around 19 years. So I came back to the company, though, in 2015, and that's when we really started to build the business of Reddit. And that hit high gear in 2018, really, when Jen Wong joined as COO. And she's really been my partner in running Reddit and building this business. But we made a profit in the back half of 2023. We grew revenue 3 times as fast as costs last year. And so what's, I think, beyond the community of Reddit and the platform of Reddit, there's actually a very nice, special business here. And our gross margins are very high, the high 80s, and have been for a long time.
So what I'll give him credit on there, and yeah, maybe it's not the best vibe, but he is right. I mean, their gross margins are great. 6.5 billion is a pretty tempting valuation, as someone said in the chat. And as I've said for the past couple of days, they're 90 million bucks away from GAAP profitability. So it's not like the stock's in a horrible situation. Maybe the vibes aren't the best from the CEO. Some people think it is. Some people think it's not. But valuation isn't that crazy, which is why I do think the IPO probably is going to be successful.
So even small improvements in revenue go straight to the bottom line for us. And so this is truly, I think, a special company. And profitability is, it's an important milestone for us, and we're getting closer and closer.
I know Jim has a question as well for you. Jim?
First, Steve, thank you for being on the set. It's fantastic.
Thanks, Jim. It's great to see you.
Absolutely. I wanted to know, when you and I talk, it's just really important, I believe, that people who have been so important to your company, the Redditors, get stock if they want stock. Were the brokerage houses understanding of that? Is it placed with people you think that actually have done so much and might actually want to hold on because it could be a great stock?
It honestly was not a controversial ask at all of our bankers and of the investors. What we've been pitching, and we've been pitching Reddit for 2 years, telling them why we do this, why it's special. And we've met so many investors who get Reddit, who understand Reddit, and know that this is, including our users in a moment like this, is the most natural thing we could do.
And we'll make it clear, it's not just Wall Street bets that one stock, right? I mean, those people might be sellers, who knows? You're talking about hardcore people who have really helped build your brand away from stocks. I imagine that they want to be long-term holders.
I hope so. I think the best investors of Reddit are people who use Reddit. And so I want our investors to be users, and I'd love our users to be investors. I think, we're all building this together. We're building the platform, and now we get to build the company too. I think it's just such a privilege.
One thing about insiders is that they can't sell for the first 6 months. So there is a lockup. So, I mean, that is another good thing, that this guy that you're looking at right now, he can't sell for the next 6 months, which is I guess that's beneficial for people buying today.
Speaking of building the company, your business is currently 95% advertising revenue. And with for those ad dollars, you're competing against the giants. We're talking about Meta, we're talking about Google. It's an incredibly competitive space, and you're very small compared to these other players in terms of the number of daily active users you have. What is your strategy to be able to grow market share in such a tight environment?
Sure. So I have 2 answers to that. First is the digital ads market is so huge. It grows by 5 to 10 Reddits per year on its own.
That's not the best answer to me because Reddit has to actually win some of that market share. Most of that money is just going back to Meta and Google.
And then what's special about Reddit is whatever you're into, whatever you're going through, whether you're getting into college, getting your first job, relationships, ups and downs, whatever health malady you have, and everybody's got one, it's all on Reddit. And so Reddit is all about context and interests. And so literally every brand's customers are on Reddit somewhere. And so I think it's actually a very good fit. And for us, I think there's really no constraint on how big the ads business can be
But you
because
haven't
of
been
that
able
breadth.
to monetize them that effectively yet. I mean, you know, I'm looking at a Bernstein piece, monetization well behind peers, despite starting to sell ads in 2006. You had 804 million in revenues in 2023. It's not exactly a huge number.
Well, look, we had 12 million in revenue in 2015. And so, look, we're getting there. And I like the way our business is scaling. I think our advertisers are rooting for us because Reddit it's not about personal and private information. It's about connecting with your customers around shared interests. And so we're seeing, I think, a lot of momentum in the market.
I don't know, dude. Look, I think the IPO is going to go well. I do think the IPO is going to go well. But I don't know if that argument's necessarily correct, that the digital ad market is growing and that Reddit's all about contextual data. Therefore, we're going to be able to monetize effectively. They haven't been able to do that for 15 years. So if you haven't been able to, really harp in on the data, I think it's a user acquisition problem. It's not a data problem. Like, yeah, you've got all the data, you've got all the content, all that stuff, but you don't have the users because they're not on Reddit. Now, Reddit has a ton of users, but when you look at Facebook, Instagram, Twitter, I mean, they have a lot more users than Reddit. So Reddit's a very special place. I do think this valuation's fair, and I think the IPO will do well, but I don't necessarily believe him that the market's growing so substantially that they're going to be able to take market share in the context of digital ads, which is why it's not an IPO that I'm super excited for. Danger says he has Reddit presence. He definitely has Reddit presence. I don't know. It kind of struck me weird when he was just like, Wall Street Bets is a part of Reddit, and there's a lot of crazy people on Reddit. I just feel like if this was really a user-friendly IPO, which again, I think the IPO will do well, but if it was like the community, he would be embracing these Wall Street Bets people. He would be doing AMA forums with them. He would be doing so much to like welcome them into them being a public company. Maybe then they would want to hold the stock instead of short the stock. But I don't feel like he's doing that. And maybe he has his own business prerogatives for why he's not. Maybe he doesn't want to get super friendly with these guys for, institutional investors may not like that, whatever. But that's the vibe that I was getting from him. Granted, I think it's going to go well. Okay, breaking news. The DOJ just sued Apple. We officially got the news. They are alleging it blocked software developers and gaming companies from offering better options on the iPhone, resulting in higher prices. Okay, so let me pull up CNBC and see if they're covering this right now. That's interesting. If they don't cover it, I'll pull up Wall Street Journal. That's an interesting argument. It blocked software developers and gaming companies from offering better options on the iPhone. Okay, let's see if there's actually an argument there. All right, we got some coverage on Apple. Here we go. So let's go to it right here. Here is what we've got with the DOJ.
Withholding critical access points from developers. The Department of Justice alleges Apple has broken the law, specifically Section 2 of the Sherman Antitrust Act, in 5 specific ways. One, by blocking innovative super apps. They say Apple has disrupted the growth of apps with broad functionality. The second is by suppressing mobile cloud streaming services. They say Apple blocked the development of cloud streaming apps and services that would allow consumers to enjoy what they call high-quality video games and other cloud-based applications without having to pay for expensive smartphone hardware. The third is by excluding cross-platform messaging apps. The Department of Justice says Apple has made the quality of cross-platform messaging worse, less innovative, and less secure for users so that its customers have to keep buying iPhones. The fourth is by diminishing the functionality of non-Apple smartwatches. Apple, they say, has limited the functionality of these third-party smartwatches so that users who purchase the Apple Watch face substantial out-of-pocket costs if they don't keep buying iPhones. And the fifth category here is limiting third-party digital wallets. They say Apple has prevented third-party apps from offering tap-to-pay functionality, inhibiting the creation of cross-platform third-party digital wallets, which, of course, is important in the whole paying ecosystem here. Now, the court process is expected to take months, if not years here. And guys, there's a political overlay to all of this, because if President Biden is to lose to Donald Trump in the fall, it's a Trump Department of Justice that could be in charge of handling the end game of this case, not a Biden one, depending on that election outcome. So it's not at all clear how that would play out, although some of the Trump people were involved in instigating this investigation into Apple in the first place back during the first Trump administration. So a lot of moving parts here, guys, but the Department of Justice now suing Apple on antitrust grounds. Back over to you.
Right. So they started looking into this in 2019 under the first
right.
Trump administration. And really, Eamon, it's part of a number of monopoly cases. Or David laughed at that. The original Trump
Are you
administration.
predicting something
Nope,
already?
just stating fact. Eamon, the part of the other monopoly cases I was going to bring up against other big tech companies, Amazon, Alphabet, they've all been filed as well.
Yeah, and I think if you talk to the people at the Department of Justice, what folks involved here have told me is that they view this really as about the App Store, right? You've got Google and Android apps, and you've got Apple apps, and those two vectors are really the only way for every other company to get to market here. And there's a lot of concern on antitrust grounds that that's just not enough, that if those two companies control the gateway for apps to get through to consumers for every other company, ours included presumably, then they can exert monopolistic power over those apps. And there's a couple of reasons why Apple might want to do that, right? Because if you're in the business of selling expensive hardware like iPhones, you don't necessarily have an incentive to want apps that don't use the iPhone or use compute power that's bigger than what's available on the iPhone. So you think about cloud-based apps or AI-based apps or what they call super apps that use multiple apps within one and allow somebody else to be the gatekeeper there. All of that is something that Apple has an incentive to keep control over. But I think what we're looking at here, guys, is the very early stages now. We'll see the official announcement coming up shortly. And then the very early stages now of what will be a months and years long legal battle between Apple and the United States government.
Yeah, that was.
So this is going to last for a long time. Apple is down 3% right now, dude. This is like, if you picked Apple as your Mag 7 pick for 2024, you probably, I don't want to say you made the wrong pick because there's a lot of time left this year, but I mean, they're collaborating with Google for AI, which I don't know if that's bullish or bearish. They got sued by the EU last week. They're getting sued by the DOJ. Apparently these were Trump era 2019 lawsuits that went away when Biden became president, and now they're resurfacing because it takes years to like get all the evidence and all this shit. And dude, if Apple doesn't concede, if Apple wants to put up a fight, they're going to be spending probably $4 to $5 billion over the next 4 or 5 years fighting this in court. And as an Apple investor, do you really want to deal with them fighting the US government for the next 5 years about antitrust? Like, that's annoying, dude. That's pretty annoying. So if this is your big 7 pick, and by the way, it had a PE of 30 and it was growing 2% like a couple of weeks ago. And now that PE has come down a little bit. Now its PE is 27. I mean, the growth story has never made sense. And so Dan Ives, he's very bullish on Apple. He just reiterated today a $250 price target. He came out with that about 20 minutes ago. I mean, could it get to 250? Sure, but that would mean another, what, 600 billion in market cap? Because what market cap right now is 2.6 trillion. At 200, they were basically at 3 trillion. So it's about 600 billion in market cap. What justifies adding 600 billion to their market cap? I mean, like, it's not the Vision Pro. That's a dud. It's not services yet. I mean, that's growing, but not growing enough. It's not the new iPhone. We don't even know what that's going to look like, if it's going to have Siri that'll actually like schedule you a meeting without saying that she doesn't know the answer. Like, I don't know. It's going to be really interesting. Microsoft all-time highs 427, Meta 509, Google down below 150, Amazon 180, Nvidia 910. Nvidia still holding 900, dude. That's the most bullish thing all day. Nvidia still holding 900 is amazing. Is AMD down or up? AMD's down. Look, AMD's down because their growth is not as good as NVIDIA. If anyone's confused about that, Robinhood, by the way, 1920 freaking 3, up 3.58%. Just incredible. The reason AMD is down is because they're not putting up the numbers. Now, they probably will over the next couple of years, but the stock's up a lot from like the $100 range a few months ago, and the numbers are not there to justify a $220, $230 price. I think it is very reasonable and good that the market is not giving excess liquidity and share appreciation to companies that probably don't deserve it, like an Apple, like an AMD. By the way, AMD's still up a lot, even if it's not at the 200 range, and like a Tesla, because Tesla is not executing yet, and they eventually will. But until then, they deserve to. I like that companies that are not executing are not getting rewarded, because it means we're not in this euphoric bull market where anything goes up just to goes up. It means there's some sanity towards capital allocation. And, Snowflake's down 35%. It deserves to be up 2% today. It fell 35%. Robinhood stuck at $8 for 2.5 years. It deserves to be up now that their metrics are improving. Micron also was stuck at a while in that $80, $70, $80 range. It deserves to be at 110 after the earnings they put up yesterday. If you deserve it, you deserve it. And if you don't, then I think the market is properly allocating capital. Pelosi's probably shorting Apple. Probably. Probably. Benny says Apple's too big to fail. We're all going to continue to use their iPhones no matter what. It's not a question of them failing. No one's saying Apple's going to fail. This is about growth. Like, at this point, Apple is going to be around probably, for the next 3-4 decades. But I mean, even that, it's interesting because if we grow out of the iPhone, maybe they're not around that long. But the point is, at least for the next 10 years, I think we're going to use iPhones. So Apple's not going anywhere. But is the stock worth buying if they've already got 2 billion people buying the phone? Now, the argument to me is, well, they need to go to places that are not using the iPhone, like India, give them the iPhone, integrate them into the Apple ecosystem. Maybe they can get $2 or $3 a month from Indian consumers that don't have a ton of disposable income, offer them Apple Music, all that stuff. But they're not doing that. They're not. I mean, like, Android has a firm grasp on India. And Apple is not making a device that is cheap enough for India. Like, no one's buying a $700, even a $500 phone in India. By the way, I'm going to go to India in October. So I'll see if people actually are using the iPhone more and more. Because when I went there 5 years ago, like, only very, very rich people use the iPhone. Most people did not use it. So it'll be interesting to see what the sentiment is like around Apple. But right now, Apple's got to find the growth. And I don't know where the growth's really coming from at this point. Can you say something nice about PayPal? Well, let's look at my PayPal options. That'll maybe I'll say something nice if I see those. PayPal, the options are up today. Wow. Yeah, there you go. So we were down 6,000 like a week ago. We're now only down 2,300. So we're recovering. We're recovering when it comes to PayPal. So yeah, that's my nice thing about PayPal. PayPal is making me lose less money. 66.61, dude. Jesse tweeted yesterday that he thinks PayPal is trying to make a run for 70. Let me pull up his tweet. By the way, does anyone know when the Reddit IPO actually happens? When does it go live? Does it go live like soon? Because we could probably watch it if it goes live, but if it's happening at like 12, then probably not going to be able to watch it. Yeah, he said yesterday he thinks that PayPal wants 70 based on the technicals. If we get 70, I think that would be really good for the overall narrative around PayPal. I think a lot of people would be more excited for PayPal, but we got to see if we can get there. 12 p.m. Okay, 12 p.m. All right, so we'll cover it on the market close. So, by the way, here's Robinhood UK. They literally put a Robinhood statue inside of the financial district in London. Just incredible, dude. Just incredible. Great execution by Robinhood. Good stuff. And then he says it looks like PayPal is getting ready to hit the 70s. Let's see. It seems like the narrative that kept PayPal stuck at 57.58 has changed. And the reason it changed is not just because of the Fed. It's because the CFO was at a conference and they said they're going to buy back $5 billion worth of shares. They said all of their free cash flow is going to go into buying back the stock. Now, look, everyone already knew this, but sometimes they have to say it again for like the street to remember, holy crap, they're buying back 7% of the market cap. And then the street got excited and they started buying the stock. So we'll see what keeps going from there. We'll see, how it plays out, but at least the street is now a lot more excited about PayPal. Engineer X, I got to give you a shout out in the chat. He said his Robinhood was down negative 62,000. Now I'm 102,000. This is someone who has been on my channel for like a year talking about Robinhood. Robinhood right now, 1927, 1928, new 52-week high. And he's been saying that Robinhood would go back to 20. I think he bought in at like the IPO. And unfortunately, he bought in pretty high, $30, $40 range. And he has not sold. He has been holding Robinhood for the past 3 years as it fell back down to $8, just DCAing. And I think his break even is like $20 or something, or $19. And he's finally getting close to break even. So shout out to you, Engineer X. That is a lot of conviction, a lot of holding on. And it's your only stock that you've been in for like 3 years. And I'm happy it's coming back. So absolutely incredible. And you've been able to DCA as well, which is great. Now, granted, Robinhood's IPO was at a time where the markets were way too liquid, and Robinhood got up to like $80 a share, dude. Like it was pretty insane. Reddit, another reason a bull case for Reddit is they're going public at a time where markets are liquid, but they're not stupidly liquid. They're liquid, but they're not going to give Unity a $50 price like they gave them back in July 2023 because Unity's not executing. So Reddit's going to get a fair market valuation. Could it get memey? Yes, but I think it's overall going to be fair, which is why it's probably a good time to IPO versus a bad time, like it was in 2022. I bought in at 24 and more, and then it went down, average price 1882. That's incredible, dude. I'm so happy for you. I'm really so happy for you. It's the same thing with Palantir with me, right? That's my story. Like everyone has that stock. They buy high and they just DCA, and you keep believing, and Vlad is fucking executing. And that execution has led to a stock that has started to go up now. Again, on SoFi, look, SoFi right now, okay, so SoFi is up about 1%. It's losing a little bit of its gains. Again, dude, if you weren't here for the morning for the beginning of the show, I got an email that some guy named Brian Baloney. What's this guy's name? Let me pull it up. Giuliano Baglonia. I'm so bad at names. He reiterates SoFi at $4. Okay, so SoFi is executing. I agree, they are, but the street does not like these guys, dude. I don't know why. Maybe it's because they're a bank. Maybe it's because they don't think banks deserve to be trading at, a higher price to sales than regular banks, even if they're growing. Because SoFi, from a price to sales perspective, is priced like other banks, maybe a little bit lower. But so the bears are like, well, it's priced like a bank. The bulls are like, well, it's growing way faster than a bank. And so, like, how do you resolve the dichotomy between ultra growth, 700,000 members a quarter, but still being treated as a bank? The fintech part of the business is not growing as much as it needs to grow. I'll give the bears that argument. But does that deserve $7? I don't think so. I really don't. So I think $12 end of year, that's my price target on SoFi. I think it can get there. But as of now, there's just not a catalyst for SoFi to get there. Eventually, I think there will be, but maybe rates literally have to be cut. Maybe rates have to be cut for SoFi to go up, which is insane because I don't think rate cuts need to happen for SoFi to go higher. But the market might be interpreting in that perspective. Maybe they were paid to do it. Look, there's an argument, dude. Like the fucking what's his name? The Brent Thill from Jefferies, who downgraded Palantir to 13, and then a week later upgrades them to 22. I don't want to be the tinfoil hat guy, but it just makes you feel like there's no way you can switch your mind that quickly. Yes, earnings were great, but if you're an analyst, you should have some understanding of what the hell earnings are going to be like for you to not downgrade them $10, which is $20 billion worth of market cap for Palantir, 2 weeks before they put up their numbers. Like, why are you even an analyst if you don't know what the numbers are going to look like? You don't have to know exactly what they're going to look like, but if you're analyzing a stock, you should, like, I know what Robinhood's Q1 numbers are going to look like. Like, it's not going to be that big of a surprise to me. In fact, I think I got the exact number of deposits right. I said crypto trading volumes. I said it would be 6.5 billion in February. And then the numbers came out. It was 6.5 billion. Because when you study a company, you have a decent understanding of what they're going to be executing like. So it does feel like sometimes these guys have other alternative incentives and they put out these random price targets and it just doesn't match reality at all. So that's what we're seeing right now in the context of SoFi. Coinbase 272, Nvidia 916, PayPal 6644. Palantir is 2506, holding 25, which is awesome. We were at 23 the other day, so nice to see we're back up at 25. And Robinhood here, 1927. We got to see if we can break 1950 now in Robinhood. If we can break 1950, I think the market's going to really start to get excited. Let me go to their order book and see what we're looking at here, and see where the sellers are. Let's see. Is SoFi making a profit? Yes, SoFi is profitable. Yeah, dude, look at this. The bid-ask spread is look at this shit, dude. There's like there's not a lot of selling. I mean, yeah, like you see that big wall, you see that big red wall, that's at the price of $19.97, which is at $20, you're going to need, a big buyer to come in. But until then, there's 1952, there's 40,000 shares. So until 1950, which is why I said 1950 would be tough, but until 1950, there's not, if you just look at that chart, there's not a huge amount of resistance. And we've looked at this historically above $19, the volume shelf resistance historically is nothing until 33, because Robinhood's been stuck at $8 for 2 years. So if we crack 1950-ish, we get above that level, the 30s are there. And then Robinhood is a good Q1. The 30s are actually there. I mean, it's possible to be there. So let's see. And dude, by the time Robinhood's at $22, like right now, $20 seems like, oh my God, it's so amazing if we get to $20. That's because all of us have been following it since like $8. The average person that doesn't care about Robinhood, when they look at the stock and they're like, oh, it's $20, there's going to be two things going through their head. Number one, they're going to be like, oh, I'm happy I'm not buying a stock that's like $5, $6, right? People always have a little bit of psychological, I don't even know how you would frame it, but kind of like resistance. And I think everyone feels it when a stock is below $10, right? You're kind of just like, what's going on, right? Like, why is this thing so cheap? Is this a penny stock? What's going on here? So if it's in that $20 range, I think people are a little bit more inclined to say, oh, it's a decent company. They're executing. They're not like, they're not a penny stock. Number two, $20 is not a lot of money, dude. Like $20 seems like a lot because we wrote like same thing for Palantir, dude. Like we were stuck at $11 for like a year on Palantir. So 23 seems like, oh my God, it's at $23. Like this is incredible. The average person that doesn't know about Palantir, $23 is $23. Like, all right, I'll buy like 1,000 shares, $23. Like, like people don't think of it that seriously if they haven't followed the stock because they don't care that much, right? Like SoFi, the people that bought it at $11, it's $11. It's not that crazy. Now, yes, I know market cap valuation, right? But people don't care that much, especially if it's in a bull market. They're just like, all right, it's $11. Like it's $11 fucking dollars. Like I don't really care. So if we got to 11 today on SoFi from 745, we would be ecstatic. But the average person buying in for the first time, $9, $7, $11, $20, it's not like Nvidia that's at $9.15. You know what I mean? So I do think if we get to that $20 range, there's going to be a lot more buyers that are more excited, and then that could help us keep moving. Brian says, do you think by coming earnings we will be around $25 plus? I think by the end of the year. I think earnings it's possible, but I think end of the year is more likely. It all depends on Bitcoin as well. Where is Bitcoin right now? But I think end of year is where I want to see that. Bitcoin right now, 66,870. So it fell from 67.2 back to 66.8. But Bitcoin's still up from that dip that we had 2 days ago at 60,000. So not bad. Let me look at the 1 year on Bitcoin. So we dipped to, I'm trying to see the actual dip that we had. Let me look at maybe 5 days. Okay, so here's the you guys see this, right? We dipped to 60,800. That's the lowest we got. This was on March 20. Wow, this was yesterday. I didn't even know that. I thought that was a couple days ago. So yesterday we were at 60,800. Today we're at 66,844. So I mean, and today we even hit 68,000 earlier in the morning, or we hit 67,000 early in the morning. So I mean, like we jumped almost $7,000, $6,000 in a day, even though we fell 15 grand 2 days ago. And so that's why Bitcoin's showing some positive momentum right now, and some of the Bitcoin related stocks as well showing some momentum here. Surprised that Coin is holding up. Yeah, Coinbase, I mean, look, I know they've run a lot, but Coinbase is going to print net income. I actually want to pull up their earnings right now. I want to see how much net income did these guys actually do last quarter. Let me see. Coinbase net income last quarter, they brought in 273 million. Okay, which is up a lot because the 3 quarters below they lost money. Revenue last quarter, Q4, 953 million. So they brought in $1 billion of revenue and about 25% of that was profit. Yeah, that's going to print next quarter as well. And so if that's going to print, then market's going to reward them. Did you sell out of your SoFi? No, I still have SoFi. I have options on SoFi. I have some shares on SoFi. My dad, I've been buying up SoFi for him in his account. He has a small like $13,000 portfolio. When SoFi got down to 680, I started buying more for my dad. So I am bullish on SoFi, dude. I think 680 is stupid. I think maybe fair value is closer to $9-10. And there are some ultra bulls that think this thing's going to 15 by the end of the year. If that happens, I won't be upset about it. I'll be very happy. But I do think at the $7 range, it's probably not the worst DCA in the world. But we'll see. If you keep getting price targets like the baloney guy, the price is not going to go well. It's going to stay stuck in this range. Hood at a 52-week high. Yep. Robin at 1932 right now. And SoFi 743, Palantir 2506. Let me show you guys a video as well. I'll show you one video of Vlad talking. I posted this a while ago. And then actually no, let's do this. Let's get an update on this. Let's do this. We'll do that, and then we'll be done for today. So we got DWAC that's going up. Let's listen to why DWAC might be going up, and then we'll keep going from there. So here's Trump's SPAC up 10% today. Here's what's going on with that.
Start with one you may not expect, and we watched Reddit go public. Next week, we're going to have a de-SPAC of a company that is starting to once again get a bit of attention, and that is Digital World Acquisition Corp, DWAC.
DWAC?
Yeah.
Oh, God, you're on that. I'm not home.
I have been on it for some time. Home. I've been talking about it. Talked about it last week, I think, briefly as well, in part because of the overall conversation around former President Trump's legal bills and his need to post the bond of somewhat $454 million here in New York. And the access that he potentially has to what would be billions of dollars of shares if current prices hold in DWAC. Why do we mention it now? Because tomorrow they're having their vote. And they're going to vote in favor, obviously, of the deal to merge with Trump Media and Technology Group. And that's the math. I'll come back to it in a minute. You can see Digital World has had a very nice run of late, and let's call it 44 or so. You want to do the math? I can take you through it because
I didn't think of that. So Trump can potentially finance his campaign with some of the proceeds from DWAC. It's very interesting.
Mr. Trump will, TMTG, essentially, Mr. Trump will have 87.5 million shares right away and another 40 million on a so-called earnout. The earnout looks pretty money good right now. It basically says if in any 20-day period following the de-SPAC, which will happen next week, by the way, that's when we're expecting it, any 20-day period, the stock stays above 1750. There are actually various numbers along the way here, but 1250, 15. He gets another 40 million shares. So you can do the math. That's 127.5 million shares. Multiply that by 45. You get about 5.7 billion, maybe even more.
I did not know that. That's a big deal.
Done the math in this very moment. Dollars worth of stock. The overall value of the company, I've got it 169 million total shares out. You got 30 million shares for DWAC. You've got 12 million from the other bucket. That's 24 million, but half of those are warrants roughly. And by the way, I'm not including any number of converts and warrants, which will take the share count up. So let's assume 169 million shares. Over $7.8 billion market value. Company right now, $3 million in revenue from Truth Social. That's the main entity that it will be.
Wait, did he say $3 billion in revenue?
Over $7.8 billion market value. Company right now, $3 million in revenue.
Oh, he said 3 million. I thought I heard 3 billion. Yeah. This is very interesting, dude. We'll talk about it in a second. This is interesting.
From Truth Social. That's the main entity that it will be operating under the TMTG banner. And you can see there's been a great amount of enthusiasm among certain shareholders. By the way, you can't even short it at this point. The borrow is simply through the roof in terms of how expensive it is. But I've also heard, as you might expect, and have not been able to confirm, that at least there have been some conversations around, is there a way for Donald Trump to use some of this enormous stake as collateral for a loan that would then be posted to meet this bond requirement. He has a lockup. It's 6 months. It's not clear, though, whether that would have to remain in place fully for that 6-month period. There may be some ways to work around that, Jim. But I did want to bring that up. I've been talking about it a little bit and looking at it for quite some time. But it's certainly worthy of some note, given this is going to be an almost $8 billion market value, of which he will control some $5.7 billion. When you include the earnout shares, the 40 million earnout shares, which I'm assuming the stock doesn't collapse after it goes public. But we'll see. We'll see.
I'm stunned. I think you're right. He will have a borrow against it. Some bank probably would lend him money based on the shares. But the company, David, if you valued it on earnings, sales, anything, it's not worth anywhere near what we're talking about.
No, it's $3 million in revenues. $3 million.
No, but you get $5 billion out of a company that's doing.
Dude, if Trump pulls this off, holy crap, dude, that is going to be wild. Robinhood 1939. Let's see if we can run for the 20s, dude. It's the roaring 20s. 1940. Let's see if we can get there. The FOMO is going to kick in. 1950 is massive resistance. We got 50,000 shares waiting. If someone comes in and just buys up those 50,000 shares, we are headed past 1950. And if we break 1950, we're going to 20. Let's see if we can get there. On the Trump news, isn't that interesting, guys? Isn't that interesting? The company, he could potentially have a stake that's worth $5.6 billion. Company's doing $3 million in revenue. A bank could maybe use that stake as collateral to give him money so he could pay off his bonds and his legal fees. And Trump could kind of finance his way through some of the legal issues he's in using DWAC. That would be interesting. Now, the question is, what bank would give him a loan against that collateral? Because the company is, Truth Social is Truth Social, right? Like, so what bank is willing to allow him to do that? Also, when it trades on the public markets, I think I don't know if it retains $44. It's going to de-SPAC. It might sell off badly unless there's a reason to buy it. And I don't know what the reason is to buy the SPAC, because it's Truth Social. Like, what are you really buying? It's going to be a very interesting thing to see how he navigates and how that ends up playing out. That'll be interesting. Okay, Robinhood 1939. Here, I'm going to end it on this. I'm going to play a 9-minute interview with Vlad. A lot of people haven't seen. If you've already seen it, then we can watch it again. He was on Yahoo Finance a week ago. Here's him talking 9 minutes. I'll give some price target, or I'll give some price updates in the chat. And then we'll end it off with this interview. And I'll be back at 1 p.m. with one of the godfathers of Bitcoin, Fred Krueger. 1 p.m. I'll be live, and we'll be discussing everything in the world of crypto and Bitcoin. He's been here since 2009, so that'll be a really fun lunch with a mid episode. And we'll end it off with this interview here, and then we'll be back at 1 p.m. talking about Bitcoin. All right, here's Vlad.
Bitcoin and stock bulls are charging. A new frenzy surrounding the world's largest cryptocurrency is pushing the price of Bitcoin to all-time highs. This is all things AI have powered stocks such as NVIDIA and Microsoft to new heights. So are major investing exchanges cashing in on all this excitement? Vlad Tenev, Robinhood co-founder and CEO, joins me now. Vlad, always nice to get some time with you. I know you do a lot of these interviews, especially a couple weeks after earnings, but I'm like, I have to connect with Vlad because your stock is rallying, the broader market is rallying. On your platform, what have these record-setting markets done to that platform, and what are you seeing among people?
Typically, when the crypto markets see a lot of excitement, we benefit from that. We're one of the largest crypto platforms in the US. We've been growing market share, and that's continued through 2023. I think last time I was on your show, we were talking a little bit about that. But it's definitely not just crypto. We've seen increased levels of activity with the markets across all of our assets and products. So people have been entering the equity markets. Options trading has been up through 2023 as well. Equities market share went up about 14%. Options market share at Robinhood was closer to 20 at about 19%. So as we've been improving our products, we stand to benefit when there's heightened market interest.
Have you seen the rally, AI stocks, crypto, whatever it is this pulling in the next generation of investors?
I think you're seeing a couple of things. Certainly, there's heightened retail interest, and you're seeing investment apps getting more downloads. You can look at kind of the public app store rankings, and there has been a resurgence in interest in investing. Certainly, we've benefited from that. But what's really interesting is it's not just the markets, and it's not just individual AI stocks and crypto. You look at our retirement business, more and more people are interested in retirement as well. So we announced that we had 1.7 billion in assets under custody in retirement accounts at the end of last year. And recently, our CFO was at a conference. He said that number had close to doubled at over 3 billion just in.
That's wild, dude. They doubled retirement assets under custody in like 2 months from 1.7 to 3 billion. I mean, people are putting money into retirement accounts on Robinhood
in a couple of months. So there's general interest in long-term investing as well. And we're excited to be serving that market.
Are investors still looking at Robinhood as a trading platform? Because I've been following a lot of the work that you and your team have done really over the past 12 months, a lot more innovation, 24-hour trading, a push into retirement products. Do you ultimately want to be that one-stop destination for, that maybe perhaps replaces going down to your local bank branch and using it for whatever you want to use it for?
There's 3 things that we're focused on right now. Number one, we want to be number one in the active trader market. So active traders are very important for us. They care about very specific things like performance, pricing, user experience. And we're making lots of investments there, both in the user experience and in new product innovations that other competitors don't offer. 24-hour market being a great example there. But we don't want to just serve active traders. And so we want to grow wallet share with our customers. We want to help them build wealth. And that's the second priority. And that's where Robinhood Gold and our high yield products come in. That's where retirement comes in. And of course, the credit card, where we're entering a new product category that's very important to customers. Then the third area of focus is expanding internationally. I think the last time I was at your show, we had just announced the UK launch, and we had also launched in the EU. And we see a huge opportunity there, hundreds of millions of consumers that are underserved. And that's sort of our beachhead to the rest of the world.
What is the size of that credit card business? How big could that be 12 months after launch? And where exactly are you with that product?
One of the reasons we're so interested in the credit card market is it's so big, right? Over 80% of US adults have.
That's what she said as well.
A credit card, at least one. There's hundreds of millions of credit cards in circulation in the US alone. And if you look at the credit card market in general, we see 3 things. Number one, it's large. Number two, the incumbents are enjoying very large margins. So the profit pools in that business are very large. And the third is it hasn't really been digitized yet. So the experience of a credit card, I mean, sans Apple Pay, is pretty much the same as it was 20 years ago. And when we see those 3 things, we see a great opportunity for us to enter the market and disrupt. So it's getting close. The team's been working hard. I've seen the designs, and we'll be looking forward to unveiling it shortly.
Vlad, just before you came on, we had the opportunity to talk to SEC Chair Gary Gensler, and towards the end of the conversation, they were talking a lot about crypto and the moves in crypto. The chair noting that the sector is rife with abuses and frauds, and at some point, maybe the investment public is putting their own investments at risk. I mean, bigger picture, what do you think about this move in crypto, and do you think investors truly understand what they're getting in the crypto space right now?
I think if I had to look at this move, it's we see a supply and demand imbalance starting with Bitcoin, right? So all of these new ETFs came into the market. They've been gathering assets we're now able to more easily plug institutional interest, of which there's a lot in crypto, and they've been generating more demand. You also have the Bitcoin halving, where there's less supply coming in, and I think the market anticipates that. I do think the crypto space is quite broad. It refers to a lot of things now, including, just coins that a couple of software engineers overseas can launch on an exchange. And I think with that level of decentralization and sort of access are risks. But then you look on the other side of the spectrum, and there's significant institutional interest in adding Bitcoin and other cryptocurrencies into customers' portfolios. More and more large institutions and endowments are starting to look at it. Governments you've seen start to look at it too, like El Salvador, for instance, but I think we anticipate that might not be the end of that. And so I think that's very much entered the mainstream as an asset that customers need and look to add in their portfolios.
Vlad, you've been leading this company really through a series of big moments for investors. Of course, a couple of years ago with the meme stock frenzy, but right now markets at all-time highs, crypto all-time highs. What lessons are you putting to play today, leadership, operationally, whatever it might be, things that you learned a couple of years ago? What are you putting into play now?
Yeah, I mean, a couple of years ago felt like a different world. It felt like we didn't really have to operate particularly well as a company to do well. In COVID times, the tide sort of lifted all boats. Now, starting in 2022 with the increase in interest rates, it sort of washed out a lot of the excess in the markets, and we've had to operate differently. So just emphasizing efficiency, performance, focusing on the things that are incredibly important, making sure that the team is aligned and we've got the top talent. I think these are all things that the management team and myself have learned over the past couple of years. And now when we see a little bit of a recovery and, if interest rates then start dropping, as many are predicting, we should see that turn into a tailwind for the business in a big way.
It's always great to get a few minutes with you. Thank you always for making time for Yahoo Finance. Vlad Tenev, Robinhood co-founder and CEO. Have a good weekend. We'll talk to you soon.
Thanks, Brian.
Okay, so that's Vlad. He said some pretty good stuff. Retirement accounts, they are going up. Robinhood 1919 right now. Obviously, interest revenue has been good for them. Crypto has been really good for them. Downloads have been good. One thing I saw about Robinhood last night, this is how maniacal I am, dude, about Robinhood. I keep track of their app downloads pretty aggressively, and I noticed they got out of the top 200 in the iOS App Store, them and Coinbase. They kind of fell off probably in the past 2 weeks. And I saw last night, I went through the app rankings. Robinhood made it back into the 200. Coinbase did not. And Robinhood was number 200. So, one second, let me get the charger real quick for the computer. Basically, what that told me was that even though Robinhood made it out of the top 200, they like 2 weeks ago, they got back in. And the top 200 is really hard, dude, on the US App Store in the United States. I know I just said US App Store, but in the United States. So let me pull it up right now. It is cutthroat competitive, dude. You got Shein, you got Instagram, you got Temu, you got like the biggest companies in the world that spend so much money on marketing and advertising. And Robinhood spends money on marketing, but not as much as like an Instagram and all that stuff. They're in the number one apps, right? So like right now, CBS Sports, because of March Madness, HBO is up there. Threads is still there for some reason. ESPN tournament ranking, ChatGPT, Google, Instagram, WhatsApp. Like, it's really hard. So let's go all the way down to 200. Robin's probably out of it right now. But the fact that they made it the other day, I was like, they're still getting more downloads because they made it into that top 200. They peaked at number 48 a couple weeks ago, and then they got out of it. But the fact that they're back in there, I'm just like, wow, people are actually, because even getting in the top 200 in the US App Store, like that's The United States is 350 million people. To get in the top 200, that means you're growing a lot. Like even the worst one out of the top 200 is up there. You got Bumble there. You got SoundCloud. Instacart is there, right? You just got a bunch of these companies that are consumer brand names. Chick-fil-A, United Airlines. So to get Robinhood up there, it's not easy. And so Robinhood got up there. So what I mean to say is I think their user growth is very strong. And obviously that's going to translate to net deposit increases as well. And we'll see how that plays out. But that's why it's beneficial right now. It's crazy people still use Robinhood after the GME fiasco. They lied to everyone. You know, there's a lot of people that still feel like that. At this point, I'm like, dude, if you really think that, you just don't want to make money, which is fine. Like you get there's still people on Twitter every day like, how could you use Robinhood, GameStop? I'm like, dude, I don't care. Like I didn't lose money. They weren't the only brokerage that did it. And the app is really good. So that's enough for me to not give two craps about GameStop. So the people that care about it, okay, you know, that's fine. But there's a lot of people that are willing to buy Robinhood stock that really don't care. 3% IRA match. Yep. That'll be enough to care. That'll be enough to care. Okay, cool. Let me just pull this up and then yeah, so this is Engineer's post, I talked about him in the chat right here. This is his Twitter post that he just tagged me in. So he says, I've been holding Robinhood since December 2021. At one point I was down 62,000. Now I'm up 2,500. And he has 5,000 shares. At one point, Robinhood was $6.71. That's how Robinhood was depressed for a while. He was down 52 grand and now you're up. Dude, congrats, man. It's hard to hold this long, to have conviction. And this is what investing is really about. I mean, you could have cut your losses back then and lost 62 grand and tried to go win it back somewhere else. Or you could have just been patient, DCA'd as you did, and eventually make it back. And Robinhood executed, and so you made it back. So incredible stuff. Incredible stuff. That's what it means to be a long-term investor. Right? And the same thing I did with Palantir, right? Like it's like everyone has those moments where they just buy and hold. I mean, pretty much everyone in 2022, that's what you had to do to be able to see if you can get those gains to come back. Robinhood down right now, 1921. I'm trying to see if there's momentum to break through 1950. PayPal 6650. It wants to get to 67. We'll see if it can get there. 1950 is still big resistance. There's about 40,000 shares waiting there. Oh wow, it decreased 17,000 shares. Now there's 39,000 in 1952, but originally there were 40,000 in 1950. We have to get through the 1920s because, like, again, guys, there is really no resistance here at all. I know this data is not perfect on Robinhood, but like there is not a lot of resistance. It's not like there's 10,000 shares at 1924 or like 20,000 shares at 1927. It's like, no, there's 600 shares, 1,000 shares, 19. There's plenty of liquidity that should be able to gobble this stuff up. There should be a good bid there. So if that's the case, maybe we get the 1950. Someone said, are you going to apply for the credit card? 1,000%, dude. The credit card is like, dude, I think that credit card is going to be cash money. I think that credit card, first of all, they're designing it with such a elegance to it. This is a preview of this right here of the credit card. And I think they're going to have a good amount of rewards on it. Even that music, dude, it feels profound. It feels exciting. It feels like they're going to they're really going to build a product that people are going to get benefits from. And here's the thing about their gold subscriptions. Right now, they have 1.42 million gold subscribers, bringing $85 million in revenue, top line from the $5 a month subscription. If they get that 1.42 up 500,000 to 2 million, they're going to be bringing in $120 million a year in just gold subscription revenue, which is basically like, I don't even think there's a cost to that. It's like it has to be like 95% margin. There's no cost to signing up and paying $5 a month. There's literally nothing they have to pay outside of the cost to acquire you once you pay them $5 a month. And people say, oh, well, they have to pay them a 5% APY. Yeah, but Robinhood makes money off the net interest income they give to users because they get a spread on the commission from the partner banks to be able to give you a 5% APY. So I would argue it's 100% margin outside of the fixed costs that they have, which means if they can just grow gold, and the reason I bring this up is because if the credit card is exclusive to gold members, which is what it's going to be, which is why they have this whole gold branding, and it's a hell of a credit card with real benefits for people that, you know, aren't elite enough for the Amex and the Goldman Sachs credit cards, you're going to get a lot of adoption on people that want rewards, that want points, that want cash back, and that potentially want to buy stock with their points in a super seamless way, the way Robinhood is able to do with the variety of the products that they have. And so I think that's going to be a winner. I think it'll be good. And we'll see what happens. How much will that percentage go down once interest rates go down? Not a lot. So let's say we cut by 75 basis points, and instead of doing 5%, the federal funds rate is 4.6%. Robinhood might only offer you 4% APY or 4.25% APY. If we only cut by 25 basis points, Robinhood might only offer you 4.9 or 4.75%. Like 5% on your money is good, but if you're getting 4.5 or 4.7 or 4.8, that's also not bad. So if interest rates come down, the spread is going to be insignificant in regards of how much it decreases. Robinhood's still going to be able to attract you because they're going to give you more than JP Morgan's going to give you. And they're still going to be able to increase net deposits and then be able to make interest income off those net deposits. So to me, I think there's a lot of ways for them to navigate this business cycle. And we just have to see how they do it. The credit card's probably going to be available in 2 weeks. They're going to do an announcement March 26th. And then after that, probably a couple of weeks from there, or maybe on that day, you'll be able to sign up for it. Okay, that's it for me. Thank you, everybody. I'll be live at 1 p.m. So get some breakfast, get some lunch, get some coffee, whatever you need to get. And I'll be here at 1 p.m. I'll be speaking to Fred Krueger. I don't know if that's literally his name, but that's his Twitter name. I think that is his name. His name is Fred for sure. I don't know if that's his last name, but he has a PhD in math from Stanford. He's been around since like the 1980s in the investing world and in Bitcoin since 2009. He's a Bitcoin maxi. He is going to be on the channel talking about his philosophy of Bitcoin, and we'll really get to dig deep into what he thinks this bull cycle will look like and why he's so bullish on Bitcoin for an hour. And we'll be live 1 p.m. and discuss with him. All right, good stuff. And I'll cover the Reddit IPO on the market close. I'll be back at 3:45 p.m. Thank you, everybody. Thank you for being here. I'll see you guys in an hour or a couple hours. Bye, everyone.